Good morning, everybody. I hope you're all ready because today is Friday. It is August 28th, and it is the beginning of the Jackson Hole speech, Jackson Hole Symposium. We're going to be getting a lot, possibly a lot, or a lot of nothing from Kevin Warsh at 10 a.m. His speech comes on. For those of you who don't know what Jackson Hole is, I put together a small pitch deck for you guys so you can understand exactly what it is, what we should expect, what we should listen out for during his speech. So guys, smash that like button if you're ready to learn, if you're ready to earn, make some money in the meantime, and have some fun because Market in the Morning starts right now. All right, good morning, guys. Let's start off right with the slideshow. Let's get right into some education. Let's get knowledge based because knowledge is power. Jackson Hole 2026, the Warsh era begins. Macro themes and, of course, our live stream coverage strategy we will be looking for. So, Chairman Warsh's debut. This is his first Jackson Hole speech. It's at 10 a.m. Eastern. It's a keynote speech. It is a new tone. This is Kevin Warsh's first Jackson Hole as Fed chair, stepping in for Jerome Powell. We all miss Papa Powell. Restrained communication. Warsh has offered significantly fewer key signals. Now, we already know Warsh is very quiet. He does not like to say much. He's not that he's quiet, that he gets on there and doesn't say anything. It's that he likes to beat around the bush. He likes to give zero forward guidance. He is not a fan of giving us those clues, those hints, that forward guidance that we're used to with other Fed chairmen like like Jerome Powell. Algorithmic sensitivity due to the lack of guidance, so the guidance we just mentioned, algorithms will move on every single thing he says. Now, how do we know what he's going to say? What's he going to talk about? Well, there's two main factors we have to be keeping an eye on. It's going to be the inflation focus and the labor market focus. Now, the inflation focus right now, status inflation still running hot. 3.4%, well above the 2% target. We know that this is due to the longevity of the Iran-US war. If Warsh dwells on inflation metrics, he is heavily signaling the rates will stay higher for longer. So we're sort of trying to read the fine print. We're looking between the lines. We're finding that invisible ink, right? Because Kevin Warsh doesn't want to come out and say anything too strong. We have to be aware of what he might be covering. What he should be covering is inflation focus and labor market focus. So if Warsh dwells on inflation metrics, he's heavily signaling the rates will stay higher for longer. Expect immediate pressure on equities and a rally in the dollar if the tone leans hawkish here. Now, what I would like to see is a little bit of a manipulation leg where he comes out, he says, hey, inflation's hotter than expected. We're going to have to do our best to bring it lower. Markets are going to sell off from that. But then I'd like to see him follow that up with labor market focus beginning to show signs of softening. If Warsh focuses heavily on preserving jobs in a cooling labor market, he's laying the groundwork for impending rate cuts. This narrative will be taken as highly dovish, sparking a risk-on rally. So hopefully he gives us the inflation focus first so that it gives us a sell-off. We get a good buying opportunity, and then as soon as we start hearing him talk positive about labor markets, that's when we can look for our long positions off of our key levels, off of our predetermined zones, and with our trade setup. So hopefully we do get that follow through and a bit of momentum there. That's what I'm looking for today with the whole J-hole, Jackson hole 30-year treasury threat. We do have to be aware. This is the highest level since 2007. Now, I don't know if you guys are aware of this, but 2008, the U.S. had a financial crisis. It had a market crash. The economy crashed. It was a horrible time. Kevin Warsh is speaking at 10 a.m. today, guys, 10 a.m. Eastern. The long end, so we do have a little time. We have about an hour and a half to prepare, find our levels, see what exactly it is he could be talking about, and be prepared before the next guy who's just waiting for 10 a.m., who's not actually preparing or not teaching themselves or learning about this. So guys, first off, shout out to you for being here every day, for taking the time, taking the effort to know that, okay, trading, it's not an easy skill. There's a reason 90 to 95% of retail traders fail, And it's not because they're trading the wrong strategy. It's because they're not educating themselves. They're not coming in with the mindset that we're here to learn while we earn. They just think I could throw an opening range breakout on the 30-minute time frame and sell it above or buy it below and make money and call it a day. If trading was that easy, it would lose its edge. If trading was that easy, everybody would be doing it. It would lose its quality, and it just wouldn't be there, right? If something is worth it, it will not be that easy. Becoming a doctor, becoming an attorney, becoming an athlete, football player, soccer player, baseball player, anything that's worth it will not give us that strong, will not be easy. Seb is going to hop on with us today as well. So yesterday we had Seb. Today we're going to have Seb. We're going to have a different Seb today. We got two Sebs on the market team, both of them equally as amazing. We joke with Seb 2.0 and Seb squared and Seb to the eighth and all this fun stuff, but both of them are very intelligent and great people. So scenario A, now this is talking about treasury yields. We just went over inflation focus, labor market focus. These are the bread and butter of what should be spoken about during this J-hole event. Scenario A, about 30-year yields peaking. Warsh ignores long-term borrowing costs. He effectively treats it as a treasury problem, keeping the pressure on long-duration assets. Scenario B, Warsh addresses the long end, expects a violent, immediate reaction in the bond market that will quickly spill over into the S&P and NASDAQ. And then the tech catalysts, the official symposium theme is financial innovation, implications for payments and policy, placing technology squarely in the crosshair. Now, of course, technology is going to be such a big attribute to this because guess what? Big tech is booming. AI is still booming. NVIDIA reported they made $1 billion a day in their last quarter. That is mind-blowing data right there. No other company has ever done that. Warsh is biased. Warsh recently appointed Mark Andreessen to an AI task force and has a history with blockchain assets prior to this confirmation. Market impact, any specific commentary on AI infrastructure or digital payments will act as a direct catalyst for massive sympathy moves in the NASDAQ, moves higher. So that's what we'll be keeping an eye on today, guys. That was a quick little slideshow of what's going on, how to prepare for Jackson Hole, and what to listen out for. If you do want to go through it, you're joining late, make sure you start the stream over. I covered it almost right away. Very important. Again, the main two focuses, inflation focus, which would be more bearish because inflation's at 3.4%, which would cause the Fed to hold rates longer. But if he focuses on the cooling labor market, that gives them the opportunity to cut rates. So those are the two that we're listening out for. Again, if you're joining late, to wrap things up for you, I'm looking for him to mention something about inflation focus first to drive markets lower, give us a good buying opportunity on gold, on NASDAQ, on the S&P, and then to turn around and say, but the labor market is cooling. So guess what? That suggests we're not going to be hiking rates at all this year. Bull markets fly. And we might even possibly see cuts because the labor market is cooling and inflation is down from 4.2%, right? If he starts focusing on the positives, markets are going to fly. So I'd rather him start with the negative, give us a good buying opportunity, follow up with the positive, and then follow up with another positive. That's, again, what I ideally want to look for today. And because the Fed is at risk with the independence that it's at, something we want to keep an eye on. Thank you, brother. Absolutely. What's up, Piyush? Dylan, good morning. Yusuf, good morning. Samuel, what's going on? Hey, what's up, man? Working while listening. That's what's up, bro. That's what's up. Awesome. Guys, if you have any questions, please let me know. But for now, let's go about our day. Let's prepare for markets. Let's find some levels beforehand. There's no reason we should just sit back and wait for 10. We are smart traders, and smart traders are the prepared traders. What's up, Dylan? Another Dylan, what's going on? Morning, Uncle. What's going on? Uncle Bands over there. Karina, good morning. Jennifer, absolutely. It's my pleasure. I'm always happy to help you guys put some stuff together, put some information together for you guys, give you some proper insight, and really just my goal is to help you get 1% better every day. And if I can make it 5% better every day, success. But our minimum of 1%, I'm getting you guys there. That's what it's all about. Let's take a look real quick at our market insights. We could look at what happened overnight. And instead of going through our breaking news, because market is so nice and it has such a wonderful platform, we could ask market for our morning briefing. While that loads, take a quick drink. Guys, stay hydrated. All right. Searching market sentiment, searching headlines. I mean, this is doing the hard work for us, and market already made it easy. There was no hard work when you're using the market dashboard. Ask Market just makes it that much easier. S&P bullish with reversal risk. Now, again, no matter what it says, bullish reversal risk, bearish reversal risk, bullish continuation, the speech at 10 can change everything. We want to be prepared. Sentiment is leaning bullish with a target of 77.85, pullback 7,700. Falling oil, nice. Hormuz progress, that's a good thing. And Treasury buyback support are holding the bid. But hot PCE data and Warsh's Jackson Hole speech are flip risk, right? So that's where the risk comes in. Overnight, Canada Q2 GDP beat at a 0.8%, was in line. Equity fund outflows biggest since March. That's a bit of a red flag right there. Equity outflows referring to NASDAQ, S&P, the biggest outflow since March. Signals pre-event caution, and Trump floated farm processing deregulation. Nothing material moved the tape. NASDAQ bullish reversal risk, sentiment is leaning bullish. Nvidia blowout earnings and easing inflation support the bid. Guys, if you hear a term like something like support the bid, that's supporting buyers. Bid is where buyers are. Ask is where sellers are. So it's something to keep an eye on. Bid is buyers. So if it's supporting the bid, it's supporting the buyers. But Warsh speech and potential Fed hawkish warning can flip markets. Overnight, equity fund outflows snapped a 13-week streak. RBI buybacks eased global yield modestly, and market consolidation ahead of Jackson Hole. AI strength intact, but risk-off positioning building. So that's something that is important to know, risk-off positioning building. That's telling the institutions aren't even confident with what Mr. Warsh has to say. Gold also bullish reversal risk. Now I'm going to show you guys the gold chart and what I'm looking for, and it lines up exactly with the narrative that I'm looking for, which is good day. Inflation is higher. We're finding some cooling. We're finding some easier data. Inflation is higher. Markets sell off. Jobs report is cooling. Markets start rallying, and things get cool, calm, and collective. That's because I am looking for more of a deeper pullback on assets like gold and the S&P before the real rally can continue. Now, if it does come out the way that I'm preparing, guess what? That leads us into a very, very nice trend going into next week. So it's all about preparation and patience when it comes to these markets, guys. Awesome. Good morning. Good morning, Anna. What's going on? Can you please do an analyze on USD CAD2? Absolutely, Samuel. I got you. Let me run through this real quick on gold, on the S&P, NASDAQ, all that fun stuff, and we will ask market about USD CAD. All right. Overnight gold drifted in tight range as we await Warsh. We know this. Iran urged countries to ignore U.S. sanctions. Just ignore them. Iran's like, yo, just ignore them. Don't even listen to them. Even Iran's like, we're not listening to what Trump's headlines are saying. That's great. That shows so much strength in the U.S. Ridiculous. Like the you guys see he signed off on calling Lake Ontario Lake America now. It's ridiculous, bro. While Dove's yield reinforcement extends the bullish continuation. Any headlines? We had USD CAD. So let's ask about USD CAD. So what'd you ask? Can you quickly analyze? Ready? Watch this. Can you quickly analyze USD CAD? We'll get rid of quickly. I don't want to mess with it too much. Because guess what? It'll be quick anyways. Okay, let's see. USDCAD bullish reversal risk, stronger US inflation and hawkish Fed expectations are lifting the dollar, but US fiscal concerns weigh on appeal. Target 1395, pullback 137, resistance over here, support over there. Overnight, Canada Q2 GDP beat up 0.8% annualized to 3.3%. Matched consensus, the implicit price index jumped 2.5%. Hotter inflation lifts Bank of Canada's tightening odds. Loonie steadied at 1.3855, unchanged on the day as the data offered no surprise. More difficult to do it since yeah, I got you, bro. Of course, man. Listen, that's why these streams are here. I know, guys, as a new trader, if you're a new trader, if you've been trading for 6 months, a month, a few weeks, a year or two, whatever the case may be, you should be working, and until you do have that consistency, you should have some other source of extra income. Even when you do have that consistency, it's always happy to have another source of income. The rich don't have one source of income. So have that source of income so you're not stressing when you're trading that, oh my God, this next trade, I need to make money. I need to pay the bills. No, you should have that taken care of so you could learn to trade stress-free. If you can learn to trade stress-free, it's going to be a lot of an easier route for you. So that's USDCAD, quick little breakdown right there. We could pull up the chart if you would like, just run through it real quick. And then we're going to look into gold, NASDAQ. I do want to start with gold, so we'll do GC and XAU USD. An area I would really be keeping an eye on gold today would be right in this zone right over here. And that is around 138,650. 138,650 over here. Possible resistance. We even see yesterday this area worked as support, and then that area worked as resistance. So this is a great key zone to possibly look for another reaction to the downside on the USDCAD. Now, if we break above it with strength, then we're looking for a retest of that to go long. And then we'd be looking for the longs there on USDCAD. So again, that's our quick breakdown on the US dollar versus Canadian dollar. Let's take a look now back at gold. And what we'll do here, guys, like we always do, is I'll put GC on the left side, and I'll put XAU USD on the right side, so our CFD traders and our futures traders are all getting the insight we're looking for. So the first thing, and what I will do is I'll mark out just the gold chart right here for us, and then we'll do the XAU chart and I'll line it up. But right now I want to do just one chart on the screen so it's easier for you guys to see, and then we'll break it down from there. So right off the bat, what do we see, guys? We see we're range bound on gold. So we don't want to be traders that are trying to sell down here or sell over here. Excuse me, we want to wait. We want to wait for those buyers to either step in and bring us back to the upside, or we want to wait for those sellers to truly break lower, retest, and continue. Again, that would be with that inflation data. Now, what we can look for too is, let's say futures market, overnight market, we start climbing higher, we find a resistance point. I don't know if I'd be completely against positioning for a short position off the bat, I should say. But I might look for a short before the speech to get us back down over here, right? So again, just continue to trade the range. I'm not looking for, go long down here and target all the way up here. We're not looking for an extension trade. We're just looking to trade the range that markets have already provided to us. And that's always going to be a lot easier than a breakout trade. Yo, what's up, Keisha? Bitcoin, we'll do Bitcoin in a little bit. I just did USDCAD. I want to cover some of the main assets that a lot of us already trade, which is gold, the S&P, and NASDAQ, and then we'll cover some Bitcoin too. Let me put a banner up in the top left over here so we know what we're covering. Right now, we are going over some levels and trade setups. So this is one of the main reasons, and let's update our previous day low, previous day high here on GC. This is one of the main reasons right here I'd like to see us move lower first, and that's because we have this daily support zone. Take a look back here. This area, look how strong this spot is on gold. This has been a resistance when price is below it. It has been support when price is above it. Support, 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 resistance, resistance, and now here we are above it. So I would look for it to act as support. This again helps me with the bullish bias, but I'd like to see him talk about inflation being higher first to help push us a little lower. Now, if we do get that push lower, we're not getting a huge sell-off. We're not selling off 200 points on gold. I'm looking for that quick volatility move, maybe 90 points, maybe 70 points. But something to bring us near that daily. It's a key level. It's that negative 20% level too. Now that negative 20% level isn't just there because I like the number negative 20%. It's there because that's where we're down 20% from those all-time highs. So because we were able to find that key level, and it's in a demand zone, and that zone itself is a key level as well where price has rejected and reacted to in the past, that again is giving me confluence, and confluence gives you confidence to take that trade setup off of that daily demand right there here. 45.80. 45.80. I do apologize on the yawns. Usually you guys know me. Take my energy drink. Wasn't feeling too good. I don't think it's a good idea to take an energy drink right now. Alright, so this is gold. We're waiting for a sharp pullback to here. If we don't get the pullback to here, I'm looking to just continue to trade the range. If he does just come out and he only says things positive and we start rallying, look for a break above this zone for a retest to continue long. And that would be the setup I'm looking for on GC. Now, let's take a look at XAU USD as well so you guys can look at both levels at the same time. So this is a 2-hour supply, right? This is a 2-hour? Yeah, 2-hour supply. And we don't really have that 2-hour supply here on XAU USD. So let's turn hours off on that. Perfect. See if there's another time frame of resistance up here that price has been reacting to. 90-minute, 45, a little bit of a 45, nothing major. 30-minute. Nope, nothing really. So that tells me that GC has it. XAU doesn't, but it does still have some key areas. Look at every time over the past couple of days, we've come into this zone and we've reacted bearish. So again, we're using this as a key area to say, great, we're below this. I'll look to sell the highs. We break above it. I'll look for the retest to continue higher. Demand-wise, what did we have down here? We had a 15-minute. No way we don't have that there either. Oh no, 45. Of course we don't have it there either because the timing's a little different. Alright, listen, that's fine. We're not going to force zones that we don't see. We're going to go through our analysis hourly. Bro, this was one of the best gold longs I've seen ever. 2-hour on GC. I'm sorry, on XAU USD. The next support zone is 44.90. 44.90 on XAU USD. That's most likely lining up with that daily demand zone. So let's take a look. Let's mark it out D2 hour. Go to our daily. Our daily zone is right over here. So let's mark that out and see how that looks. Yeah, look at that. That 2-hour demand is right inside that big daily support area. So looking for price to move lower before we can move higher. Simple as that. We want to buy the dip, looking into a more bullish Fed. Now, again, one of the main reasons, too, I'd want to look for the Fed to be more bullish is because, yes, the Fed should be independent from the government, from the president, but unfortunately, it seems as though he's trying to lean more towards impressing the president, being on his good side, all that stuff. So just something to keep in mind. They should be independent, but that doesn't mean they have to be. Well, they do have to be, but clearly nobody has to be anything at this point, seeing that we're just changing names of lakes and we're selling call-out services as the president for $100,000 a month, which, again, is wild, but that's the time we live in right now. So I guess just go with the flow. So GC, that's what we're looking at. Gold, that's what we're looking at. Let's take a look at NASDAQ now, NQ. And I will get to Bitcoin very soon. Guys, if you haven't already, man, smash that like button. Show some love. show some love. I came here prepared to kill it today with you guys. I want you to be as prepared as you can be. We're going to make some money today. That's it. That's it. Now, NASDAQ is really, really struggling to really find resistance up here, right? All these areas that we pushed lower from, we had a very clean move. This was an overnight move right here. So if we start breaking this blue line I have right here, this 29,757, that's what I'm considering my volatility trigger today. Whereas if we break it, I would look to see, can we hold above it, 29,800, and then make our way towards 30,000. That'd be another 200-point move from the NASDAQ from that point. I wonder when he will rename some country also because it is easier. Bro, famous, that's funny, man. I wouldn't be surprised. He'll respell Iran, Iran, to EYE, like I, and I'll call it Iran. It's Iran now. That's it. You can't tell me otherwise. All right, so let's see. NASDAQ. Again, a bit of a similar situation where it's like if we could find some selling pressure first, bring us to this big 4-hour support area right down here. This area price reacted 400 points from. I want to see price pull back, find support 29,331, and find support from there. Not because there are buyers sitting there. Yes, because there are buyers sitting there, but also because Kevin Warsh is speaking. Now, this is all happening in an hour and 10 minutes, so make sure you guys stay tuned. We will be covering the meeting. If it is live on, let's see, if it's live under the Market TV tab, under the Fed Reserve channel, then we're going to watch it. Absolutely, no doubt about it. If it's not live, I'll find it. I'll see if we can find it. But guess what? If it's not live, you know what we have? We have our breaking news tab over here, and as soon as he says something, market is going to pick it up. Famous, you're absolutely right on that. We really do. We really are. Okay, so NASDAQ. No, Nil's not joining, bro. Nil's a busy man. Yo, he's got some stuff he got caught up with on the back end, so all love to Nilab for staying busy and keeping market as consistent as it is, keeping these live streams going, everything, man. Everything always falls back on Nilab. Great guy, smart dude, really fantastic platform. So, Kevin, you rather position yourself while he is speaking or put orders or enter previously? No, definitely. Right now, unless I was already long from somewhere back over here, like Tuesday, I do not want to be buying before he speaks with the tight stop loss. You guys should know me by now. I'm a day trader. I want to be in and out maybe anywhere from 5 to 15 minutes to 15 minutes to 2 hours because I'm just trading the range. I'm trading what markets are providing to us. If, however, we get that move and we get a pullback, yeah. Excuse me. We will be looking for that. And Seb will be joining us too for the second half. You get fills better in futures? Oh yeah, bro. Spreads are much, much nicer in futures than they are on Forex, on CFDs. CFDs, you have to be careful too. A lot of the CFD brokers possibly unregulated, possibly messing with their own spreads. So be very careful. All right, let's see. So NASDAQ, again, resistance point right over here, 15-minute supply zone. We did not break our previous day high yet, so something I might want to try to keep an eye on is these were higher highs and higher lows. And then what happened? We failed to make another higher high, and then the higher low we created got swept, so we started creating some lower lows. So if we come back up here and reject again, guess what's going to happen? We're going to create another lower high, and then we're going to go create a lower low. So I want to find and see if those short positions want to line up right near 29,693, and guess what? That also lines up with key level and key psychological point, 29,700. Very nice there. Great stuff. Great analysis. Good breakdown. Good preparation. Preparation is key. A prepared trader is a successful trader. Remember that. Kev, there will be a speech on YouTube. Yahoo Finance has expected live. Okay, cool. Absolutely cool. We'll see Market TV. Yahoo Finance, listen, man, we're ready. Yeah, again, big shout out to Nalab for making this possible. The Market TV section over here for you guys makes it that much easier for you guys to watch Market in the morning and watch these other big speeches as well. Great, guys. Absolutely amazing. So that was the NASDAQ. That was the ES. NASDAQ ideally looking to either sell the highs or buy the lows off a reaction. What else do we have? Take a look at ES, the S&P 500. ES is already near those highs. So something to point out right off the bat is ES might, and look at this, ES might break that previous day high and then reverse, while NASDAQ hits that 15-minute supply and key level and then reverses. And what that's called, guys, is that's called divergence. When one market is able to make a high while the other market is not. And again, ideally, what we're looking for is it to break previous day high here, right there on ES, while NASDAQ holds its previous day high over here. We would then look for shorts on the NASDAQ in that supply area. But that trade setup would have to occur before Warsh speaks. It is 8:55 right now, so we don't want to force anything. We don't want to rush anything in these markets. We want to prepare so that when markets do open, we could sort of sit back and wait for markets to come towards our levels. Now, this big 2-hour supply zone you guys see here on my chart, take a look at this. This area of rejection was the last point of rejection that kept us back within this range. And this was back in August 19th. This was about a little over a week ago. This was a week ago on Wednesday. Gave us a bear move. We since came back, rejected it once, came back, pushed into it even higher, rejected it twice. But look at each rejection. Each rejection got weaker and weaker. Went from a 40-point move to then a dig deeper into it, and then about a 20 to 30 point move, digging deeper into it again. So it looks like we're getting ready to break that zone. So that's why I'm not ideally looking for this big ass zone above us to hold. That's why I faded it out, right? That's why I made the bucket over here, the opacity, much thinner, because I do want to be aware of the top and bottom of that zone, as I don't want to be a buyer right up here right before we break it in case we don't break it. However, I don't want to be selling. Excuse me. I don't want to be selling just because we're there. Right now, ES is in that 45-minute supply zone. You guys will see that right here, rejection point. We had a sell-off, pulling back into it. Now, if we do just start rallying, let's say there's a bunch of bullish anticipation and we just start rallying off the open. What could be happening is retail thinks, oh, we have to stay out of it till 10 o'clock. Meanwhile, what if we got a really nice move from 9:30 to 10? Do we really want to be the traders that are sitting out, or do we want to be traders that are prepared and taking the moves when they show themselves? We want to be that trader every time. Put our volume profile up here. Wonderful. Perfect. Nice. Awesome, guys. Any questions, let me know. I know somebody wanted to look at Bitcoin. I will pull up Bitcoin as well. Akabir, what's going on, brother? Good morning. Welcome. Let's take a quick look at Bitcoin now. I do wonder Bitcoin with volume profile, if that has any type of significance. I always worry about, something like Bitcoin. Obviously, yes, it has a lot of volume in it, but how legit is that volume? You know what I'm saying? Bitcoin's not regulated, right? I don't think Bitcoin's regulated anywhere. So the volume, I'm pretty sure, could be manipulated much easier than volume on something that is regulated. Bitcoin, I've been saying for the past, I don't even know, since we sold off last October on Market in the Morning. I've been saying Bitcoin under 60K is a great buy, because guess what? You buy Bitcoin at 60K and we make our way to all-time highs again, you're looking at over 110 to 120% return on investment from that level. So if you believe Bitcoin is not going to zero, 60K is the great buy, and it could have even possibly been the last stop before we do head higher towards 127, 130, 150, 200. Now, another narrative of Bitcoin would also be pain in the market. Now, when we talk about economies, we talk about geopolitics, we talk about economic recessions, there has to be pain in the market for things to reset. There has to be pain for gain. There has to be an ability to say, okay, there's some pain in the housing market. There's pain in the Bitcoin market. MicroStrategy just got liquidated. There's pain everywhere. Yields are flying. Like, pain, 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 pain. And guess what happens from all that pain? Markets can finally reset. Markets can finally breathe. It puts people, consumers, in a better position to start investing again, puts consumers in a better position to start looking for homes again. Right now, we're in a housing crisis. We're in a crisis mode where the new average home buyer age is 40 years old. Guys, we went over this a few streams ago. Let's look it up again, just sort of kill some time here. But average new home buyer age, 35 to 40 years old. Now, if we look it up from 1990, it's going to be like 28 to 30. Put that in perspective. I'm 27. I should be looking for a home right now. A nice big-ass home. Not a small, a big-ass home. People my age are not looking for a big-ass home right now. People my age, I'm sure you guys even see it on social media. Even the trading content creators. They're roommates. They have roommates with people. Like, how is this considered a strong economy if just 20 years ago people were buying homes at this age, and now here we are today? I guess it's 30 years ago now. Let's look at by year. I wonder if it'll give us a little bit of a rundown. Here we go. Nice. 28. Then 2018 was 38 years old. Talk about a spike. So since 2018, things have been much, 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 much harder on the economy. Who was president back in 2018? Oh, right. The guy that added the most deficit to the U.S.'s debt. Presidents and how much debt they created for the U.S. This should give us... I saw a pie chart recently. Hopefully it brings up something. $8.4 trillion from Obama, 7.8 and 7.8. Oh, yeah, look at that. Oh, wait. Let's see. Okay. Yeah, Obama was up there too. But Trump also up there on that 2017 to 2021 run. And it's not showing us today, but I saw a pie chart and it was like Trump combined of his first term to this term was like 11 to 12 trillion. Like, where's it going? Yeah, exactly. Obama did that in 2 terms. Trump's doing it in 1. Insanity. But again, we don't control that. We can't pick up the phone and go, "Hey, stop spending." We're just here for the ride. We're here to prepare. We're here to manage our risk. We're here to trade what we're trading. We're here to make some money. NASDAQ looks like we're trying to push higher here. There we go. Again, looking to see a possible short entry up here, 29,700 on the NQ. Perfect. Cool, guys. All right, guys. If you have any questions, please let me know in the chat. This has been a great stream so far. Seb is going to be joining us in a little bit. I'm going to create a poll right here, and I'm also going to pull up that PowerPoint one more time. So for anybody who might have joined late, because when I was covering it earlier, there were only so many people, so I do want to cover it one more time. But I'm going to create a poll, and that poll is going to say, are you bullish or bearish on Jackson Hole? Bullish. Now, bullish, and again, I'm going to go through these slides and explain exactly what all of it means. No answer / ranging. Okay, cool. I just gotta cancel that old one. Perfect. Okay, guys, I'm going to go through these slides. As I go through these slides, I want you to vote. Are you bullish on what Kevin Warsh has to say during Jackson Hole? Comment 1. Are you bearish on what Kevin Warsh has to say during Jackson Hole? 2. So bullish 1, bearish 2, or no answer or ranging, which means he doesn't really give forward guidance. Comment 3. So Jackson Hole 2026, the Warsh era begins. Chairman Warsh's debut. The 10 a.m. Eastern keynote, a new tone. This is Kevin Warsh's first Jackson Hole meeting as Fed chair, stepping in for Jerome Powell. Restrained communication. Now, we already know from the past 2 FOMC meetings that Warsh has offered significantly fewer clear signals and forward guidance than his predecessor. Bit of a bearish situation there where it's like, okay, why aren't you giving us forward guidance? Are you worried about something? Are you concerned? Are you lacking confidence? That's bad. That's uncertainty for investors. And algorithmic sensitivity. This is what we really have to be aware of as traders. Due to the lack of guidance, algorithms will move off every single word he says. Not every word like good day, we rally, I hope you're doing well, and we should sell off. No, keywords and key terms of the dual mandate dilemma that we're looking at, and that's inflation focus and the labor market focus. So the inflation focus is we're running hot. We're at 3.4%, well above the 2% Fed target. If Warsh dwells or speaks on inflation metrics, he is heavily signaling that rates will stay higher for longer. He does not have to say rates will stay higher for longer. But if he's focused on inflation being higher, if he's focused on some of these attributes, that's going to be giving us a more bearish tone because that's more hawkish. Now, what I was looking for, like I mentioned earlier when I covered this, I'd love for him to start off on the inflation focus to drive prices lower and give us a buying opportunity, and then have him gear towards labor market focus, which is going to be labor market is beginning to show signs of softening. Which focuses heavily on preserving jobs in a cooling labor market. He's laying the groundwork for impending rate cuts. This narrative will be taken as highly dovish, sparking a risk-on rally. We are getting some headlines right now. I'm going to pull those up in just a moment. The 30-year Treasury threat, the highest level since 2007. I told you guys earlier, when we have those highest levels since times that markets and economies have crashed, that's a huge red flag. That's something we want to be aware of. The long end of the curve has become a massive concern, recently prompting the Treasury to intervene with aggressive buybacks. Scenario A. Warsh ignores long-term borrowing costs. He effectively treats it as a Treasury problem, keeping the pressure on long-duration assets. Scenario B. Warsh addresses the long end, expect a violent immediate reaction in the bond market that will quickly spill over into the S&P and NASDAQ. Kev 2018 IMF bailout for Argentina spilling over to 2022-2025, Greece, Ireland, and Portugal 2012. Nice. Good call. Good call. That's our homie Doc over here. He's our in-house doctor. He's a cool dude. He's a very smart man. The theme. The official symposium theme is financial innovation, implications for payments, and policy, placing technology squarely in the crosshairs. Technology and AI. Warsh's bias. Warsh recently appointed Mark Andreessen to an AI task force and has a history with blockchain assets prior to his confirmation. Market impacts. Any specific commentary on AI infrastructure or digital payments will act as a direct catalyst for massive sympathy moves in the NASDAQ. If he says anything positive about it's great to see AI infrastructures continuing to build out, AI revenue is continuing to stay strong. Positive, 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 risk on, risk on, risk on. So guys, I do hope this little slideshow helped you here. This is our main focus today, is inflation focus and labor market focus. After that, it is going to be the whole tech catalyst being the theme today. Wonderful, guys, wonderful. All right, let's see what these headlines are. Fed hammock urges immediate rate hike, warns delay will create problems. What else do we have? Hammock sees year-end inflation at 3% missing target. Yeah, 3% is 50% higher than the 2% that we're looking at. It's time for Fed to act with rate hikes waiting to create pain. So again, are we starting on a more bearish route before he comes in and says something bullish? We won't know until it happens. That's why we want to prepare for any situation. Trump administration working on AI rule to curb China's remote access to chips. US considering AI rule, same situation. August oil shipments seen down over 50% from July on drone attacks. Let's see. So nothing major there, just sort of staying within that range. Nothing massive. Take a look at our chart. Look at the reaction we're getting to that Fed hammock headline though. Popped, spiked, dropped off. I'm still waiting to see possible shorts of 29,700. Oil drifts lower as Hormuz flows balance slow progress in Iranian diplomacy. Okay, so that's good. Let's take a look at oil. We have a little time anyways. It's still only 10 after 9. We still have 50 minutes before the Fed chair comes on for his Jackson Hole speech. Now, oil is really confined, and what I'm going to be doing myself is I'm going to add an alert near our previous day high on oil. I'm going to change the message of this alert. The message is going to be oil is bullish, which would be a more bearish sentiment, and then we're going to save that. Then I'm going to add an alert down here for an extreme move to the downside on oil. Might even add it a little higher than that previous day low, and this message will be oil is bearish. And that would help signal buyers stepping into the market. That would be more risk on for gold, more risk on for ES and NQ. Awesome, guys. Great breakdown, great preparation today. Who's happy? Who's excited? Who's ready to make some money, man? And if you haven't voted already, let me know. Are you bullish or bearish on Jackson Hole? 1 for bullish, 2 for bearish, 3 for ranging. What's up, Matt? Good morning. S&P is in this supply area, so it is finding a little bit of resistance off 77.55. I am not jumping in shorts right now. Excited to blow my account. Waiting for NFP and CPI? What are you talking about, homie? That's not till next month. We're waiting for today's event, Jackson Hole. Or J-Hole with your A-hole. Haha, just kidding. Adam, what's going on, Adam? Good morning. We do have Michigan sentiment at 10 o'clock, but that's in the shadows of the keynote speech. When I say in the shadows, I mean it really just doesn't have much over it. 3 is for today, but I like NFP and CPI. Got you. Cool. Nice. Look at that. We're split. You guys are split on that voting. 5 of you bullish, 5 of you bearish, and then 2 of you are no answer / ranging, which again means he gives no forward guidance. Should give some type of information. After the news, we'll see. Now I think these are just Fed speaking at this point. We could search, and I think we even had Fed speaking yesterday. Remember yesterday they were talking their crap as well? Let's see if we could find that. Yeah, Goolsby. You guys remember Goolsby was talking yesterday? Goolsby, political pressure on Fed puts me on edge. Don't be so emotional. You're our Fed one of our Feds. Please don't be emotional. Don't be on edge. Political interference on central banks generally leads to inflation. Current low hire, low fire job market is unusual. It's because everybody's hiring Claude. Goolsby's biggest short run fear is that inflation is not under control. Now is the time to act given persistence of inflation, does not see Fed policy providing restriction for economy, appropriate for Fed to act to lower inflation. So look, Hammock was saying lower inflation, Goolsby was saying unusual, and that the Fed should act on inflation. So we're getting a lot of 50-50 on the Feds and those headlines. Would not really be trading those myself. It is obviously giving us a bearish reaction here, and that would be the only way I would be looking to trade this right now. But let's just be patient. There's really no need to ever force or jump into trades when we don't have a proper catalyst or strong confirmation. All right, let's see. Just setting up myself over here. I'm going to set up my my broker login so we are prepared to execute, take any trades. ES rejecting the supply area. This is an area. Look at the volume picking up right here. Look, using the volume profile, look at this volume shelf picking up right here. Leaving this area as an imbalance, right? We could use that as our area of interest. Say, okay, do we want to hold this or do we want to break back below and reject this area? Because we're range bound, we're more likely rejecting this area to push back lower. Awesome, guys. Let's go. Let's go. 200 of you in here. Guys, shout out to you guys for being so amazing. If you're here on Twitter, make sure you drop a like. Make sure you also vote on the poll, too. We can see your comments as well. Like, comment, repost, or even quote. On Twitter, you could quote, which means you repost, but put your own headline up there. Quote it. Say, listen, come join the stream. We're here to help you guys prepare for Jackson Hole. We're going to take some live trades, too. We have Mr. Seb joining us in about 5 to 10 minutes. This is going to be another great stream for you guys here on Market in the Morning. If you have any questions in the meantime, you can always feel free to ask. All right, let's see. Just waiting. Wait. I'm going to put ES in the top left, NASDAQ in the top right over here. And put our VIX back over here, VIX. Put our weighted index over here. That is our equity chart, which is NVIDIA, Apple, Microsoft, Amazon, and Google. And that has been rallying. So let's take a quick look at that. If our equities can remain above this area, above this key level, I would not want to try to jump in a short. If equities start dumping from here, this could have been a liquidity sweep from the overnight session to then push lower. Extended trading hours does have some resistance up here. 95.60. All right, so we're just being patient at this point. We're going to let markets come to us. We're not forcing trades. We're not jumping in long. We're not jumping in short. We're waiting for either New York session to open to give us some volume, or we're waiting for Warsh to come out to give us some insight. Nas looks great on the shorts here, I must say. Same with ES, but it is coming into that support area that I had mentioned. I definitely consider shorts here. I just wouldn't want to short immediately. I'd possibly want to see a breakdown first and a retest. What's our VIX doing? Volatility index. VIX is chopping around. It is below 14. It is below 15, I should say, which is more bearish on the VIX, which is more bullish on the S&P and NASDAQ. Guys, man, we got to hit 50 likes. If we don't hit 50 likes by the time Kevin Warsh speaks, I'm ending the stream. That's right. That's right. You guys better get it there. You guys know I'm bluffing. But I do appreciate it when we're on the like button up, guys. It takes a lot of effort. It takes a lot of info, a lot of knowledge. These streams are not easy to do. Contrary to belief, if ES starts breaking lower here, I would consider a short position off of this supply zone. My issue with it is NASDAQ isn't at a rejection point. It is at its value area high, but nothing like screaming, hey, this is a good short opportunity. If I'm not seeing something that's screaming or confirming a level or confirming a trade, you're not taking the trade. It's that simple. Create structure, create foundation, create a system that tells you when to enter, tells you when to exit, tells you when to not trade. That's what's up. If ES tries to remain below 77.50 here, 77.50, look for a short. And there's a very tight stop loss on that. Just like a little pre-market play right there. I did mention, though, in the pre-market plan that we were looking for possibly NASDAQ to head towards supply, while ES breaks previous day high to give us divergence play. But we'll see. We'll see. All right, guys, I'm wrapping up the votes right now. So any last minute votes, please let me know. Are you bullish or bearish on Jackson Hole? Bullish is 1, bearish is 2, and ranging / no forward guidance is 3. We're split 50-50 on the bullish and bearish, guys. You guys got to show up, show out. Too choppy market? Yeah, too choppy. Too choppy. What about gold, gold, gold? Tizzy, T-Wizzy. I don't answer if you're yelling at me. I don't know if somebody's all caps on me, I'm not answering that. Now, gold, we had this rejection point up here. We've been pretty range bound. Gold is something I would like to see us come towards 46.36 for some longs, 46.60 for some shorts. But we do want to be careful and be patient to see how Warsh comes out and what he says. Because guess what? We're in this range. All it takes is him to go, good day, and then the markets could dump. All it takes for him to go is inflation is still higher than the Fed's price target, and we dump, right? So just be a little patient there. ES is looking okay on the shorts off this supply area. It is still pre-market. Let's see. I'd really want to see us start dumping, though, with some strength. Nice little short opportunity, even if we just took that towards VWAP. Trade the range. Don't range the trade. 3 messages with caps out of stream. That's it. 3 strikes and you're out. Awesome, guys. Awesome. Guys, don't forget, like and subscribe. I hope you have fun in this stream. I hope you guys learned something in the stream. I'm locking that poll out right now. We are 50-50 across the board. We have bullish, bearish, and no answer all riding the same right now. My vote, you guys know my setup. I was looking to see if he could give us a bearish move first and then give us a bullish reaction. So from the, where is it? Let's find those, what's it called? Let's find the whatchamacallit, the pitch deck, whatever, slideshow. The dual mandate dilemma, inflation focus versus labor market. I want to see that inflation focus be spoken about first, and then I want to see him talk about the labor market. So if he talks about inflation first, markets are going to dump off that because the markets are going to perceive that as, okay, the Fed's worried that inflation is remaining higher. That's a bad sign. That means we're going to hold rates longer. Okay? But on the flip side of that, the labor market is showing signs of softening, is cooling down. That means the Fed has the opportunity to cut rates. So I'd like him to start bearish, followed up with something bullish. That's what I'm looking for. Does it have to happen that way? Absolutely not. It doesn't have to happen that way. I vote for no forward guidance. Yeah, so does Warsh. So does Warsh. Warsh also votes for no forward guidance. That guy. All right, I'm in a light short on ES here. I'm not a big fan of pre-market trades. It's 922 right now. We're rejecting a point. We'll probably, if we don't find a quick move lower right now, I will get out before New York session. But we'll see if we can take it for a nice little scalp here. Yeah, exactly. We'll keep gold up over here. There we go, ES. Give us a quick little move. Let's catch a nice little pre-market drop. Drop. Let's go right towards VWAP and chop around today. Take out these buyers that are at this low right here. It's 77.43. Nice. There we go. Getting a headline right there. And this short was also, why? Because I was looking for the reaction to Hammock, saying lower interest rates, this and this, the Fed, this, Fed interest rate tools, simplest to grasp, all this. He was saying something a bit more bearish, he or she. I don't even know, to be honest. Fed credibility depends on delivering dual mandate. Dual mandate's what we just covered in those slides. Minute 38 left here on the 5 minute. 15 also has 6 minutes left. Just looking for a quick little drop here. Looking for this 15 to continue. It is continuing on NASDAQ to the downside as well, which is a nice sign for these shorts for me. Right now, we're looking for the ask to start picking up, which, again, is the opposite of the bid. There's a low volume area. We tap the bottom of it. Got to see us break below it. We break below it. I have some confidence in these shorts. Guys, smash that like button up. Let's have some fun here. Kelly, how are you? Catherine, good morning. Good morning. Good morning. Might pull back here towards 49 on ES. Looks like we are getting a little bit of an ask picking up there. 44 seconds in this 5 minute. We also have 5 minutes before the New York session opens. I'm cracking open a cold one. And no, not beer. I don't even drink, man. I don't do anything fun. I'm boring. I do market analysis with you guys. But a cold Celsius. Get that energy going. This is the first time I'm trying the watermelon Celsius. I usually get the peach, or they have like some other flavor too. I'll let you guys know how it is. It tastes like watermelon. They did a good job. 11 seconds left here. Let markets come to us. Keep an eye on any headlines that come out that could move markets. Yeah, yes, give us a dump right here. Give us a straight down dump, and we'll take profit near 77.42 before New York session opens. Just keeping an eye on the 15-minute time frame. There we go. Pow. Pow, pow. Another drop right here, man. Keep that going. Straight down. Pow, pow, pow. Boom, boom, boom. Hold up. Where are the sound effects? Gold news. Nah, just those headlines. Gold news for what? The gold's not moving right now. What news are you looking at? Nice clean drop off right here on ES. Definitely already considering taking profit. That was a nice quick move. Boom, some more money on the table. Love to see it. Keep going, S&P. Love that, love that, love that. Whew, let's go, baby. That's what I'm talking about. TP1 smashed. 4 minutes left in this 5 minutes. Smashed. Keep going, ES. Keep going, NASDAQ. I'm taking profit at TP1 right here. It's still pre-market. That's W's in the chat right there. That's how we do it at Market in the Morning. Boom, boom, boom. That's what's up, baby. That's what's up. Awesome, guys. Yes, sir. Good job. Good work. Well done. Well done. That's amazing. And it could keep going, but I'm cool with this. From entry to stop loss, almost a 3-to-1. I'm chilling. It's pre-market. We're going into New York session into profit already. That's success right there. That's a nice way to start the day. Yes, sir. Yes, sir. Bang. And again, it could keep going. We have 3 minutes left in this 5 minute, though. In my opinion, that's plenty of time for it to wick back up. I don't want to be in this 3-to-1 profit and let it go right back to break even. Bro, Ryan, I know, right? Pre-market trade. Who is this guy? Who is this? But bang, that's how we got there. Oh, you just got here, bro? Oh, man. Quick little 10-minute trade on ES. It was based off the 15-minute time frame analysis. ES rejecting 77.55 in a supply. NASDAQ 15-minute basing candle forming. I'm looking for New York session to open. I'd like to see the 15 close where we are right now, and then see a quick move up on NAS, rejection off that, and then take some shorts. Amazing. Amazing. Quick little move. I like the way you move. Keep going, ES. Keep going. Still dropping. Love to see it. Fantastic. Bang. Look at that. It's amazing. Guys, anybody else here take that? Let me know. Building some cushion for Warsh. That's it, man. Building some cushion for Warsh. Hey, yo, wait a minute. Guys, man, if you took that, smash the like button. If you saw it, smash the like button. Money, money, money. That's what's up. Markets gave us the opportunity to enter. Look at that exit so far. Look at that wick rejection. New York session opens in less than 2 minutes. Wow, what an exit. Yo, let's go, Anna. Yes, sir. Yes, ma'am. Let's get it. Let's get it. I hope you got out. Hope you look at this rejection. We closed. Markets reacted. Wild move right there. Take a look at gold. Gold's doing a whole lot of nothing. Whole lot of nothing. No major news events. No headlines right now. Well, right now. 10 o'clock, we have Mr. Warsh speaking. Guys, I'm going to review those. Yeah, you did? Let's go. Let's go. W's. W's. Good job, Anna. Absolutely. Well done. Well played. Bro. Broke my phone. Yo, Bird, you're funny, bro. You're funny. Bird, I'm pretty sure you're new here to the market in the morning streams, but I know you even have CH, which I'd assume is capital hungry, in your username. And I know yesterday Seb, and I think the other Seb too from the other day, was saying that you are a capital hungry OG. Well, it is a pleasure and it is a honor to have somebody like yourself here. It's just how we do it in the show, man. This is a daily occurrence. It's what we do. Cha cha one time. We take care. We look for 3-to-1s, 2-to-1s, 4-to-1s, so that if markets stop us out, we're not worried that the next trade we have to win the next 2 trades to make our money back and then some. The next 1 trade will make our money back and then some. Yo, MC Elite? Is it Elite or Eltsum? What's going on, brother? Nice to see you grinding. Bro, I'm always here, baby. I'm here, and we're taking care of business. Look at that. NASDAQ with the drop. ES trying to continue wicking around. 15-minute did close how I was looking for on NASDAQ, so I'd be looking for continuation on NQ. NASDAQ-wise, I'd possibly want to see if we can find support off of down here, 29,572. I'm not jumping in right away. Look at this ES bounce back. Wow. ES finding resistance in the supply area again. I'm just waiting. I'm not forcing any trades right now. We're waiting, waiting, and waiting. And if you missed it, we're waiting. There we go, guys. Smashed 52. Let's run that up to 70. You say it like McDonald. McEltsum. Awesome. Awesome. Old McEltsum caught some W's. ES chopping around. I am very happy for my exit. Even if we come back up here and then sell off again, I'm fine with my exit. We took profit. We followed it from a pre-market perspective. I don't want to be forcing trades at this point. Well done, everybody. Well done. These buyers are looking like they're getting trapped up here. I will say that. Oh, we got a call wall level we just rejected up there, too. Not for nothing. Not for nothing. This might be a re-entry on ES. I'm not taking it myself. I'm going to be a little more patient. Can continue, you know. If you see the setup, if you like the opportunity, go for it. If you don't take it. Nobody has a gun to your head saying you have to take a trade right now. Remember that. NASDAQ coming down lower. I'm looking for 29. What is that? 29,560. We just hit demand zone 29,570. 29,560. ES trying to reject on lower here. There we go, ES. We're going to continue. We're going to chop around or what? Chopping around on ES. Let's wait. Look at that NASDAQ in demand. I don't want to short ES, so look at this rock in a hard place right here, where we have ES hitting resistance, trying to push lower, NASDAQ hitting support, trying to move higher. Leave this alone right now. A nice swing short could be nice. Possibly. We'll see. We don't know what he has to say. I'm going to, one more time, because we do have more people in here now, cover, where did it go? Just very quickly, what I'm looking for on Jackson Hole, dual mandate. I'd like him to talk about inflation first to drive price lower, to add worry into the market. Then I'd like him to circle back to the labor market being cooler, which would signal more of a dovish tone. So start on the hawkish side, give us that sell-off, give us a good buying opportunity, turn back around, go back to the buy side. We're taking it with that. Hey, Deidre, good morning. Happy Friday. Took my money on gold, ready for the weekend. Bang. That's what's up, Deidre. Well done. Well done. Awesome, guys. Good job. Good work. Chopping around. I want to keep an eye on NASDAQ coming into this area, that 60 that I mentioned. Did we tap it? We were very close to it. Let's see. I'm just setting up possible order over there. That NAS trying to react. Great. Be very patient. I could even let the 15-minute close at this point, as the 15-minute was suggesting more of a bearish move. Nice. Silver play, bro. The play on silver is to leave silver alone, man. There's so many better assets to trade. So don't trade silver right now. That's ranging, man. Don't do that to yourself. We're sort of in support, then we're in resistance. I would not trade silver right now, bro. Gold. Maybe look for a gold short at some point. NASDAQ tested that zone and it is trying to reverse. That's great. Look at that reversal off this area, 571. That was I had a pre-market plan, guys. I do pre-market analysis every day. I have a community you guys can please feel free to join. There's a free community portion where I go live every day after market in the morning. Then I have an elite version, which is only $50 a month. You get the daily preps every day. And what I was looking for on NASDAQ, let's see, where are we? NASDAQ, longs in zone 29,572. Look at that, 29,572. Look at the quick reaction there. 30 points, 40 points, 50 points. Bang! That's what's up. That's what's up. Surround yourself with knowledge. Surround yourself with good information, good people, and you're going to find success in your trading. Period. I'm waiting on NASDAQ. I do think we want to try to create one more low here. I'm not forcing any trades. Just staying patient. Oh, and I will give a discount because you guys are here from market. Let's see if I could find that. There we go. So if you guys do want to join the elite program of that, use discount code MRKT for 10% off. It's monthly and annual if you guys are interested in joining. I will start doing weekly team meetings as well. I can't do this week. Got my little brother's birthday. Got some stuff to take care of. But we will be looking to continue that as well. I'm not trading with that news. Listen, you're a smart man, BMO. Smart man. Let's take a look at our equities right now. See if equities are giving us anything valid. Equities are... Ooh, NVIDIA's rallying out of a demand zone. That almost makes me want to jump in a long right now. Just be a little patient. Know that markets can chop around all they want. They don't have to give us straight up. They don't have to give us straight down. Nice little move on Nas there. Nice. Let's go. W's in the chat. That's what's up. That's how we do things around here on Market in the Morning. Beautiful. Amazing. Guys, 260 of you in here. Fantastic. Great start to the show. And damn, yo, what an exit on that ES trade. That is phenomenal. Phenomenal. We are 1 for 1 on the day. That is how we do things here on Market in the Morning. We could have probably taken this long on NASDAQ down here off that reaction. Look at that, man. For my pre-market plan, 29,572. That would have been 70 points already on the NASDAQ. Beautiful. 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 If you guys got any questions, man, let me know in the comments. Always happy to help. This type of patience that we have to have right now, best time for us to go over questions. Amazing, guys. Well done. And if you haven't already, smash that like. Yeah, happy birthday to Little Kev. Appreciate that, Tazzy. Yes, sir. Yes, sir. He's going to have a good one. I still wouldn't go long up here, right? We had the reaction down here. This was the long entry, not up here. At this point, we're rejecting open. At this point, look at the place we're in right now. ES is rejecting. NASDAQ's finding support. That is a divergence in support and resistance on the NASDAQ and S&P, that is not a market we would look to trade with confidence. Whereas when we were up here looking for the short position, ES was in resistance, supply. NASDAQ was also creating a 15-minute supply. Both of them were hand in hand. That's going to be the best trading opportunities when it comes to trading the NASDAQ and S&P. At this point, it is 9:38. We are not forcing trades. When have we ever forced trades? We haven't. And if you do, guess what's going to happen when you force trades? Stop filled. Liquidated. It's not going to be a good time. Bro, it was long. So bro, I said it could jump in longs right now. If you did, that would have had zero drawdown. I went from 613 to we're now at 653. That would have been a nice quick 40 points on NAS, and it's still going. I'm being very careful because now at this point, NASDAQ has this 15-minute resistance point from earlier that we were looking at, and ES is also in resistance, did not break yet. So be patient. Be patient. Be patient. We want to be patient. If I do see a short opportunity, I will let you guys know. Let's put our weighted index chart back up here. Key level on the weighted index. I think NAS could spike one more time into the zone. I'm not jumping in a random short right now. We're just staying patient. There's that push into the zone one more time. Not much resistance up here, so really just a wait and see situation because we could pop right through it. And guess what? Wouldn't we rather be the patient trader that doesn't force a short here to get stopped out immediately than wait, get a reaction, and then take the trade? But right now, NASDAQ does have a big passive seller at 29,709 and boom, broke the zone. No trade. Oh, here comes the divergence setup I was looking for. The divergence setup I was looking for was ES breaking previous day high and NASDAQ coming into this supply area up here around 29,700. 29,700. Key level up there. Bang, we're in there. Let's see. I'm not in any shorts. I'm just saying we're in there like we're in that zone on NASDAQ. 29,707. Big passive seller. So we push in there, we start reacting. I will consider some shorts. Good morning, everybody. Hope you're having fun today. I know I am. ES made that high. 15-minute rejection on ES. 30-minute trying to hold. Hourly. Bit more bullish than bearish, but still more range bound here. So just be patient. I know a lot of people are going to be buying these highs right now. I don't want to be one of those people. We had those lows called out, 29,572. I called that out. I put that in my pre-market prep in my community at 7:30, 2 hours ago. Okay, NAS pumping up, pump it up, pump it up. I'm definitely considering some shorts off this reaction. I just really wanted to see us move into there was a passive seller at 707, but we just hit that key level area. So let's see. Nvidia's starting to reject too, which is a good sign. Should always take it on a very light size. Let's see if we get one more push into that zone. If we do, short. If we don't, yeah, it might just continue. Let's see. I'll let you guys know if I trigger that short. How about Dow Jones? Tell it to kick the can. No, I'm just kidding. Hold up. Give me 1 second on the NAS setup right here, and I'll let you know about the Dow. Nvidia trying to hold a lot of equities in resistance right now. I got Seb shooting me a message. I do want to know. Oh, okay, that's a nice setup. All right, I'm going to take some shorts there. Stop at the high we were just at. So I'm short Nas, just looking to trade the range. Very tight stop loss on this. I do know we just had some bullish momentum, but I'm short NQ off of this zone. Stop near the high we were just at, so just playing it safe. Looking to trade it back towards VWAP. This was a trade setup also from the morning. Nvidia was selling off, finding a little bit of support right now. If we break back below 29,680, this low right here, that will give me a lot more confidence. Right now, we're trying our best to hold. We are finding some selling pressure. Got to see a dump here. We do have passive sellers at 29,707. Look at that. Let's go. Come on, Nats. Find that selling pressure. Let's just print today. Let's go back to back today. Come on now. And if it doesn't, we stop out. Guess what? We're still in profit on the day. That's what's up. We need a strong break below 29,662. 29,662, right over here. We need a strong break below this zone. We get a break below this zone. Sellers are intact. We're able to take this trade all the way down here. It does look like we're trying to make our way towards that passive seller, though, to the upside. Very small risk on this trade. Again, keeping it managed so that we're still green on the day from the first winner, but not stopping out just because we're chopping around right now. Yes, rejecting 5 minute. Ooh, that's a tough 5 minute. That's definitely a more bullish 5 minute candle here. So I do want to be a little patient. Looks like we might even come retest one more time in this zone. Again, that's 707. Big seller at 707. We might push into 707 first and then drop. I'm still in the shorts. My stop is actually at 702. So I'd like to see these sellers defend this area. Look at that retest of the zone. Look at that reaction. There's 70. There's 68. Come on, baby. Let's go. Let's trade this range. That's what's up. There's 64. Oh my God, guys. Cha-ching. Money printer right here. That's what's up. That's what's up. I'm getting out into a little bit. I'm taking some off right there and a little bit of strength. That was a beautiful quick move. Guys, what's going on here? What is this? This is market printing Fridays, and Warsh didn't even speak yet. That's crazy. That's what's up. I told you guys. We're going to have trade setups before Warsh even speaks because retail is going to think, oh, I have to wait. F that. If your setup shows, you take your freaking setup. Guys, hold up. I think on top of everything, we're killing it today. We're 2 for 2. And now I think I hear somebody knocking at the door. Wait a minute. Who do we have? Mr. Sabaniel, what is going on, Seb?
Hello. Can everybody hear me?
Yes, sir.
Yes, sir. How's everybody doing? Got a new camera, new mic. Hopefully you can hear me better.
Nice, bro. Yeah, you look clean. Look at this handsome fellow over here, like Superman with the glasses on. Clark Kent?
Thank you, my go. How's it going, man? Dude, you've been throwing gems after gems, bro.
Bang, bro. Bangers today, bro. Absolute bangers.
Completely agree, man. Dude, and we're gonna have, I was seeing that some setups, I 100% agree with you, man. Some setups come before the actual event, people. I mean, that's what markets do, right? They position themselves before of what's actually gonna happen because they know everything, right? So let's go ahead and let's see. So just put me up to speed, bro. I mean, let's see on gold. So look, on gold, actually, I believe it was on Wednesday this week. I gave this trade idea. Now it did play out after actually the day closed, Asian session opened, and it did play out, of course, not to TP, but we did have our areas of interest marked out. So 380 pip profit right there is always a beautiful thing. Now, for the time being, right now, we are just going to be waiting for Kevin, your boy Kevin. Of course, not Kevin, the GOAT
Not the good
himself.
one.
Not the good one. We're talking about good day, Kevin. Okay, it's not fun when he says good day. It's better good afternoon or good morning. But hey, man, it is what it is, right? I mean, what can we do? What can we do? But yeah, what are you looking right now on Nasdaq? Have you taken any trades today?
Bro, we're 2 for 2 on the day already, man. We are on fire right now. We caught beautiful short position. I'll share my screen one more time. We caught a beautiful short position on ES before New York session opened. We caught these shorts right over here for a quick little 3 to 1. We caught it from here to this low. We got out right where markets decided to reverse. So great exit
Beautiful.
right there. Then, unfortunately, I did miss this long entry on NASDAQ 29,572. I was sharing with everyone that I do a morning analysis in my community. And
Hmm.
that 29, let me see if I could find it real quick. On NASDAQ, looking for long buyers step in 15-minute demand at 29,572. Guess what? 572. Bang. That's 127 points. All right.
100.
Missed the entry. Well, we missed that one. That's all right. The next setup we took, though, was off of here on the 5-minute and 1-minute, where we had this rejection point here on the NASDAQ. And wow, again, another killer exit. Look at that reversal off of that exit. We are scalping the moves off of our zones.
That's actually beautiful, man. Beautiful. Yeah, you're scalping really well before any type of big moves come along, and
Yep.
yeah, I mean, what are we expecting with Kevin, right? I mean, with Warsh. At the end of the day, he doesn't give any type of forward guidance. Okay,
Nope.
he. So, what are we really expecting? I'm gonna be expecting him to be a little bit more dovish today, but I mean, that's just a well,
Whew.
I would say a dedicated guess with everything that I have researched, but of course, we got to see what happens. Now, I do not believe he's going to say that much, but oh, look at that.
Wild.
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 Bang, bangs, bangs, right? It's beautiful.
Bands, bands, bands. That's how we do it at market in the morning.
Yeah, how's everybody doing? Let me see the comments. Yo, hello, hello. I was not seeing the comments. My bad, people. Did anybody say hi? Let's
What's
see.
up, guys? Everybody show Seb some love. Say hello to Seb. Good morning to Mr. Sebster.
How's everybody doing? Everybody doing? Whoop whoop.
Nvidia's dumping right now. That's what's helping NASDAQ drop
That's what's
right here.
helping Nasdaq. I see. Yeah,
Beautiful.
makes sense,
Yeah, that is
dude.
for
And
sure.
yeah, on gold, I'm not seeing that much on gold right now. We're still in those choppy conditions that I was talking about on Wednesday, right here, which is going to be between the 4600s and the 4648s. Now, of course, depending on anything that happens with, so look, how I do this is it's how we're gonna do this is I usually do this as a normal FOMC. As you know, Jackson Hole Symposium is just once a year. So what we're gonna do is the next thing. Probably today, I'm not gonna take any trades because it's gonna be very choppy. What I would be taking is after the fact, right? After the fact that we understand what Kevin Warsh said, we understand what their forward guidance, then we can 100% go ahead and start looking for any type of buys or sells. But if you're looking for right now for a long position or a sell position before the actual fact, and you're just gambling it away, all right? And that's not how we trade over here. We protect capital, and by protecting capital, we make more money. So yeah, let's see. To 10 minutes before Fed, we got 9 minutes before Seb. Hey, how's already doing, Mac, Elitsum, and Kaijin Jesse? How you doing, brother?
Let's go, guys. We got 300 of you in here, man. One love on that. Good community. Good build up today. Yes, sir. Lauren, you already know we're on fire. The whole team's on fire. If I'm on fire, you guys are on fire. If you guys are on fire, I'm on fire. If Seb's on fire, we got to go get the fire hydrant because I got to make sure he's okay.
100%, bro. 100%. And I wanted just to see here, like, with there's 8 minutes
Yep.
to prep, quote unquote. If nobody has prepped, we're gonna go ahead and prep together right now. So we're
Let's
gonna
do it.
ask. Jackson Hole is in about 8 minutes. We're asking market directly. Market's gonna give us the whole breakdown. Help me prep and what to look for. All right, let's see what happens. Of course, we also have Market TV here. Let me just show you guys. So inside the actual market, we're going to be able to see, if I'm not mistaken, the
Yep.
yeah, the conference, right? We should have it here with the Federal Reserve. Now, we do have a lot of more channels just for you to have everything on the go, all right? Stop switching between tabs. Everything just needs to be in one place, okay? That's how we do it around market. Now, going back to Ask Market, we're going to go ahead and just check. Let's see. So how to prepare. either a hawkish Warsh or a dovish tilt. Now, I do believe this is going to be more of the case. Now I don't have time to explain why. We have 7 minutes, but I do believe this is going to be more of the case. Now, if we are like on a hold with a 69% base case, we are going to be range bound. All right, where dollar's going to stuck around the 99s. The S&P 500 is going to be below 777s, 777s, and gold is going to hold above the 4600s, 4640s, which we're already around this area, right? We're going to start holding above the 4600. So if he is very stagnant, he doesn't say much, we're going to be in this same range, people. Okay. Now, if that happens, again, I'm not looking for anything. It's going to be overcomplicating myself and my mental health for no reason. So of course, if we do have a dovish tilt, then we're going to be looking for dollar breaks above the 98.7s, equity surge above the 77.5, which the S&P 500 specifically, and gold breaks the 4640s. Now, that's a quick thing that we're going to do, but of course, the first 5 minutes after the speech are the most important, just to see how markets are reacting and how they are actually digesting everything that Kevin is going to say. Last but not least, we do have the rate decision odds right here, which right now we are sitting in a no change. And actually the hike for October goes down to from 31% to 25%. Now, what do you think is going to happen, Kevin, on Jackson Hole?
Yeah, so let me pull up my chart real quick because what I did was in the beginning, and I put together a little bit of a slideshow for everybody to break down what Jackson Hole is, how to prepare. You guys know I gotta set you guys up for success and make it as easy as possible for you. That's what Ask Market's for. That's what Market AI is for, and that's what these live streams are for. So Jackson Hole 2026, the Warsh era begins. A new tone. We'll cover this real quick. We'll even skip over this, but the dual mandate. This is what I'm going to be looking for. The inflation focus. So running hot at 3.4%, well above the Fed's 2% target. If Warsh dwells on inflation metrics, he is heavily signaling the rates will stay higher for longer. This is more hawkish. Labor market, however, has been showing signs of softening. If he focuses on this, he might be laying down the groundwork for a more dovish tilt. So ideally, what I would like to see him come out and say is I'd like to see him come out and say, good day, markets crash. He comes out and says inflation is still higher than our Fed's price target. And then bang, algos go crazy to the downside, markets react to the downside. But I'd like to see that be our buying opportunity before he starts talking about how the labor market is starting to soften. Then, guess what? We bought the dip. We stay prepared. We see things start to go more bullish. Now, something else to note is all of the headlines we've been seeing lately about the worry of the Fed's independence from the president, from the government, all this fun stuff. So because that's the case, I also want to be extra careful that, okay, he could just be trying to please a certain somebody. So again, if that's the case, he comes out, he says inflation's higher than our price target. Then he says, but jobs data is showing the economy is in a stronger position right now. Instantly, markets are going to react bullish. On gold, I had a beautiful, let's see if we could pull that up real quick. GC. Let's go GC. Yeah, you know me. Beautiful. On gold, I have a daily support area right below our previous day low near 45.80. And that's also right near the key level, the 20% pullback from all-time highs on gold. So again, this now lines up with that analysis that I'm looking for of him saying inflation's higher, markets dump, jobs data is cooler, markets pump, finding this as our support zone. But we do want to be prepared for every case scenario. If it is just more bullish, as we see gold is pumping right now, I'd love to see on GC at least a strong scale above 46.75 and then a retest of this range to continue higher. Got to be prepared for everything here.
Completely agree with you, Kevin. Completely agree.
What are you looking for on gold, homie?
Yeah, I mean, same thing as you right now. It really just depends on Kevin's stance. Once we do get his quote unquote forward guidance that he will give today, right? We're gonna go ahead and see. But again, what I'm seeing, he's gonna just with everything that's going on in terms of inflation, labor market, geopolitical tensions. I do believe he's gonna have a more dovish tone. Now, with the dovish tone, of course, we already looked at ask market, what we're going to do depending on that, which is right here, people. This is hawkish, this is balanced, and this is dovish. If you want to read it, more than welcome. But that's what we're going to be looking for. Of course, we do have around 2 more minutes for the actual speech, but let's see what happens if we do have some fireworks right now. It does look like market participants are positioning themselves before the actual event. This is very normal. Something that even Kevin was explaining to you guys is that don't wait for that economic event release for you to actually execute your trade. If you have confidence and you have conviction with your research, right, with your analysis, I'm not telling you to have an idea and then just have conviction on that idea. No, have the data backing it up and then go ahead and execute. Don't be especially if you're using prop firms. I believe if you're using prop firms, you cannot even trade while the
Yeah.
news. So yeah, I mean, be very picky with your entries and don't over trade or um
No way.
don't get back to the markets. All right, that's the worst you can do as a trader. But yeah, this is what I'm going to be looking for right now. Gold, it is spiking up. We have around 15 seconds and it's going to be 10 a.m. Eastern time.
Said pull up. Yeah, I was gonna say pull up economic calendar for a sec. We have
Yeah,
5 seconds before Michigan sentiment as well. Here comes markets finding some selling pressure here.
51.7 Michigan sentiment. So it is on healthy territories and it is above the forecast. Nothing too major because people, if you understand this economic events, they are graded on a 50 grade point, meaning if it's above the 50, it's unhealthy conditions. If it's below 50, it's not unhealthy conditions, that specific sector of the economy. Now, let me just
All right,
refresh here.
here
We're
we
going to be
go.
waiting.
Here we go. Here we go.
Uh,
The Fed Reserve is not streaming it. I just pulled up. It looks like Yahoo
yeah.
Finance does have a stream going right now. But what's great, guys, is guess what? We have our market dashboard that will tell us bullish
Yeah,
or bearish.
I gotta sign in. Wanna go ahead and just change
Yeah,
the background just so I can sign in real quick. I don't know
got you,
why.
bro. You don't want all your data up on the screen while we're live streaming?
Let me just give my password. I maybe use this password for everything. You never know.
Oh my god, I hope you don't.
I know, bro. I know.
Guys, let me know if you could hear this. Could you hear that?
I personally cannot. So I
Okay,
believe.
so I'm gonna
Yeah.
remove my screen, reshare my screen. Should let me share it with audio. Audio entire screen.
Yeah, it's on Yahoo Finance, man. Market Life is goaded, bro. Market TV.
These steely
I can
You
hear
hear?
it. Yep, I can hear it.
reveal the sign of dawn that I preserve. So before setting out today, my recommendation is do a wellness check. Ask yourself, is this a cone day or a Bernanke day?
They
The
say
best
they
thing
barely can
yeah,
hear it. Can
that helps us
you
all get
up
out
the
here to the
volume?
mountains and clear our minds and think straight about our world and our time. For me, it feels like the right place and the right audience for real engagement with the ideas that matter most. Innovation, as Kristen mentioned, is the conference theme. And I believe the public and the markets understand that innovations in the conduct of Fed policy will help deliver price stability alongside full employment. So here's a quick overview of what I'll cover in my remarks this morning. You can call it an outline, you can call it a trail map.
No, you're not allowed to glitch. What are you doing? What?
On a few of the longer term questions we're asking at the Fed about the latest general purpose technology, AI, and where it might take the economy. Then I'll reflect a bit on the practice of forward guidance and the interaction between the central bank and financial markets. Next, I'll present some of the key principles that I believe should guide the conduct of monetary policy. And finally, I'll give you my assessment of what's happening in the economy. So first, I think we should try to prepare a bit for future policy conjunctures. With the unchanging picture of the Tetons as our backdrop, we are here to survey an economic landscape that is anything but static. It wasn't so long ago, including in rooms like this, in the run-up to the crisis of 2008 and over the decade that followed, when economists and policymakers were speaking of secular stagnation, speaking of a global savings glut. It was a widely held view that an excess of capital would sit on the sidelines for a very long, long time. Because there just wouldn't be enough compelling investment opportunity.
Bro, it's struggling.
It is. It's Yahoo Finance, man. What a bad channel. I mean,
So you know what it is too? A lot of data is hitting the markets right now.
Yeah.
80-year-old name for the newest technology.
I tried to. All right.
It's been faster even than its evangelist predicted just a couple of years ago, pouring into AI-related infrastructure of all sorts. A kind of super Moore's law seems to be playing out. Scaling laws, too, are changing both the method and speed of innovation.
Does it look
Capital
funny on
and
your
labor
screen?
have combined to create large language models at the heart of AI.
A little bit. By the way, people, gold is heading into our first area of interest. Do not enter any type of buys. Do not enter. By the way, people, gold is heading into our first area of
Safe.
Just 12 months ago.
Oh, come on. All right, I'm going to move this to a different screen.
Attentively. We
His face is red because I'm on a high-resolution monitor that doesn't want to work with me right now.
Yeah, sometimes when you get the best, it happens, man.
But
now, again, people, we are hovering right now gold around the 45.63s. Now, do not enter any buys right now. It's not. It's premature.
So, when?
You hear it?
Will token usage be complementary or competitive to labor? Will the next generation of AI models demand even greater capital intensity too? Or will the models themselves help devise a capital-light solution?
Talking about
Among the
AI.
other yet unknowns is the resulting market structure. Who gets to make the money? It's not obvious where the returns on capital will land or on what time scale. Early on, how much of the surplus goes to owners of scarce assets, the AI labs or chip makers or energy producers or cloud providers? Over time, how much of that value accrues to businesses and consumers? And importantly, what are the implications for workers and for the employment side of the Fed's mandate?
Yeah, brokers are going to freeze, guys. A lot of algos hitting markets right now.
Tokens that give access to these models. Might there be a heterogeneity of tokens, such that growing
No,
sums
Paul, you're
will be
lag
paid
behind, bro. There's no
for the
woman
access
speaking
to
right
the
now. Warsh is
best
speaking
models,
live right
those
here.
at the frontier? Will token prices for older models fall to the level of their marginal cost? Well, we'll be thinking through these matters with the help of a task force on productivity and jobs. My early check-ins with the leaders of that task force and the rest have been very encouraging. To be clear, though, their recommendations will come later and have no bearing on decisions we make in the current policy conjuncture. But I believe that for future policy challenges, this intellectual investment today will leave us much better prepared for tomorrow. Next, let me say a word about forward guidance and its substance.
Look at that. Wow.
As our task forces go about their work.
No, you got to be kidding me right
No way, bro. What?
Fit for purpose.
There we go.
To highlight one example, I've set out to change the form and function of the Fed chairman's so-called forward guidance. You might know about my longtime discomfort with early pronouncements of future policy decisions.
Oh,
I much prefer another path,
oh my
and
God.
now we'll make the case for it. Transparency in communications about future policy decisions is not an end unto itself. Communications must be in service to the Fed's paramount responsibility. And what is that? That's getting policy right. Forward guidance as a regular practice was adopted by my colleagues and me during the global financial crisis. It was essential at the time, and we introduced it with much fanfare.
He's going to take it away.
But as with other legacies of crises past, I believe the practice has outstayed its welcome.
Shoot.
In normal times, the role of forward guidance should be limited,
No.
circumscribed. Otherwise, it risks creating ambiguity in the name of clarity. Oversharing policy deliberations and overcommitting to future decisions can lead markets, businesses, and households astray. And I believe when policymakers make quasi-commitments on interest rates throughout the cycle, we inhibit our own freedom to make the right calls when it's time to decide. To get policy right, we also need to get the relationship right between the central bank and financial markets. The Fed needs clear market signals, as unfiltered as possible, from market internals, from the level and change in asset prices across sectors, the prices and trading volumes of Treasury securities, the foreign exchange value of the dollar, the cost and availability of credit, a broad set of commodity prices. These and other indicators should inform the Fed's near-term outlook on economic activity and inflation throughout the business cycle. They should also reveal the state of broader financial conditions and the risks and uncertainties of the financial cycle. At the same time, market participants themselves,
In case you missed it, he wants to end forward guidance. He's saying it's outdated, just so you guys know.
form their own expectations on things like output and employment and inflation, and they too should stay sharply attuned to risks.
Smash that like button. Have some
In
fun.
my view, the Fed should be humble and never naive. The Fed plays an essential role in the economy and markets. Our tools are powerful. We determine the path of short-term interest rates, and market participants will always try to anticipate what we will do next. But we should not indulge a regime in which market participants are looking primarily to the Fed for their next trade. The economic literature has long described the distorting effects, what it called the Hall of Mirrors problem. If markets rely materially on the Fed's guidance and the Fed relies on market prices, we're more likely to be blinded to new developments, more likely to be caught unprepared,
By
and more
market.
likely to commit errors in policymaking. Now, perversely, market participants are unlikely to bear the biggest costs of the Hall of Mirrors problem. Most serious harm is likely to befall those without any financial assets. If the Fed gets inflation wrong and judges the economy wrong, who gets the worst of it? Not the financial high flyers. Hardworking Americans are the ones left to deal with inflation that's too high or jobs that suddenly appear less secure. So, if forward guidance is ill-suited to normal times, how about the new Fed chief commits at a meeting just like this
Buy
to some
markets.
explicit reaction function? Surely he could tell us his interest rate path.
Game over.
Say the data were to
Game
come in
over.
hot or cold. Well, I wish our understanding of the economy were so precise as to provide a mechanical, tried and true answer. That some simple function, like a Taylor rule, could be rigorously relied upon. But our knowledge just does not extend that far, at least not yet.
But it
Other
has in the
factors
past.
most relevant to the proper conduct of monetary policy, they change over time. Providing forecasts to illustrate the Fed's reaction function works better in theory than in practice, better in the lab than in the field.
Better in the lab?
I am not alone in noticing that forward
This
guidance
guy, right?
21, to cite just one example, might well have slowed the policy response to high inflation. In my term as chairman, my colleagues and I will endeavor to construct more reliable models, more robust rules, and we'll do this knowing that accuracy in forecasting is still just an aspiration. With so much changing so fast in our geopolitics, global supply chains, technology, it's wise to be modest about what we can and cannot know as we sit here today. In the same spirit, we should receive the full range of ideas on matters that may inform the Fed's monetary policy discussions. If the aim is optimal decision making, and it should be, we should not crowd out views on the economy. How then to chart a better path to policy? In the balance of my remarks, I will share with you some key principles that guide my thinking on the appropriate conduct of monetary policy. And then I'll offer my promised assessment of the economy. So let's turn first to principles. First, I've noticed in this line of work, yesterday's news has a way of getting mistaken for what's happening right now. The challenge is to know the difference. In other words, we must interrogate reality. Make sure we're not setting forward-looking policy based on stale or inaccurate data.
It's not stale, dummy. It comes out
Nor
every
should
month.
we rely on
Every month, you know?
This is wild. Just
Trends
excuses
matter most.
flowing out of his mouth right now.
The Fed's a decision-making agency.
Yeah.
We make choices amid uncertainty.
There's that bearish move on gold
The
I was
data
looking
upon
for
which
of his
we draw
speech.
must be relevant,
Still got a ways to
Yeah.
go.
I think it gets a little bit more to go, if I'm being honest.
Oh, yeah.
with you.
Oh, yeah, he ain't done.
Second principle.
Only 15 minutes in.
The Fed's
This guy.
Yo, I'm gonna head over to Yahoo Finance right now and just like tell them to stop with the lag. But you know what it is, man? It's
actions are
because
intended
the amount
to
of people
ensure that
watching
the
it.
aggregate
Yep, that's also true.
for what's
I think
really
we're on Reuters. We have the Reuters channel too.
hence, evaluating the current and
Oh,
expected balance.
I don't want to click off yet. If it
between
freezes again, we
aggregate
will.
supply and aggregate
Perfect.
demand is imprecise. Third principle. There should be no misunderstanding. The Fed's price stability objective of 2%, as measured by the PCE price index, is a firm, fixed target. Let me be equally clear about another aspect of this objective. Price stability is not self-executing, nor is inflation necessarily mean reverting. It's the Fed's job to deliver stable prices, no excuses. Fourth principle. The Fed also bears responsibility for maximum employment.
Employment.
Achieving both sides of our mandate over the medium term is not an either-or proposition. I do not believe the Fed's dual mandate works at cross purposes. After all, high inflation itself is very harmful to economic prosperity.
Ooh.
Fifth principle.
First thing he said.
Term interest rates are the predominant tool to achieve the dual mandate. Unconventional policies to spur economic activity may suit genuine crises, of which we all have much experience, but they should otherwise be used sparingly, if at all. Sixth, money matters. I know it's not fashionable these days, but my view is that money has something important to do with monetary policy.
Thanks, Captain
We should
Obvious.
pay attention to money created by the central bank and
Guys, make sure you stick around because we will cover what he's saying and what he means by everything in a little bit. We're going to analyze the headlines that came out and everything he said.
and other factors alter the mechanics that link the monetary base, the velocity of money, and the broader economy. But that is scarcely a reason to ignore the
Seb, could you
ultimate
mute
effect of
yourself? It's
money
picking up an echo.
on financial
Yeah.
conditions
Thank you.
and prices. Finally, a quieter Fed, a more purposeful Fed in its communications, is better able to meet its objectives. And we can be held accountable for delivering on our remit, the only true test of our credibility. To borrow a line from General Chuck Yeager, at the moment of truth, there are either reasons or results. So having heard a little bit about AI and general purpose technologies, having heard a little bit about the next policy conjuncture, a little bit on principles, let's turn to the economy today. Given those principles, how do I read the economy? What's really going on outside the window? It's a little ironic, there are no windows in this room, but they're big ones at the Federal Reserve. And we've been using those in my first 100 days, and I expect we're going to continue to use those in the period right ahead of us. Now, you may have read in the July minutes the unanimous view of the FOMC. Labor markets were stable, output solid, but inflation remained too high. A good majority of my colleagues and I thought the wiser course was to await new information in the intermeeting period, especially given possible developments in supply chains, investment flows, and geopolitics, before deciding whether a change in interest rate policy was advisable. And we expressed our joint readiness to act as circumstances require. For my part today, as we sit here, I'm impressed by the overall performance of the economy, which appears to have strengthened. One indicator of strength is how well an economy holds up under stress, how well it holds up under shocks. On that score, both Main Street and Wall Street have been remarkably resilient. Several other observations. Business CapEx is rising rapidly.
Yep.
The 4-quarter change in investment in equipment and intangibles has been around 9%, its highest growth rate since 2021. And more than half of the CapEx growth can likely be ascribed to the build-out related to AI. What about profits? For the firms in the S&P, profits have grown more than 20% over the past year alone. Profit margins are quite elevated relative to history. Overall equity and market volatility, quite low. We're staying keenly focused on market internals, watching performance across sectors. Expectations for both growth in CapEx and corporate earnings are running quite high. I continue to watch the change in the growth rates, the second derivative. The follow-on effects on asset prices, business confidence, consumer incomes and spending are equally important to gauge. Credit spreads on corporate bonds and leveraged loans are near the low end of their historical averages. And issue volumes this year, quite strong. Looking beyond fixed income markets to the banking business. In the July so-called SLOOS survey, banks tell us that standards for C&I loans are on the easier end of their historical ranges. It helps explain their growth that we've seen this year in these loans. In my view, credit and loan markets are showing few signs of policy restraint. Now, certain sectors, like housing and agriculture, are showing strains. But on balance, I would be hard-pressed to describe broad financial conditions as restrictive. Real consumer spending has been healthy despite these shocks, increasing more than 2% over the past 4 quarters. If you combine consumption with the brisk investment we talked about earlier, private domestic financial purchases have also risen. These purchases have increased at a pace of nearly 3% or so far this year. That's a measure that typically carries more signal than GDP. Trend here too, positive. So on the employment side of the Fed's dual mandate, our country's doing well. Labor markets are quite stable. The jobless rate at 4.1% remains low by historical standards and hasn't changed much in a couple of years. Unemployment claims on a 4-week moving average, an empirically robust real-time indicator, are near their lowest level in decades. In my view, the relatively low turnover in today's labor market is partly a result of the significant rematching between employers and employees that happened after the in the post-pandemic environment. But when labor supply is barely growing, monthly job gains are naturally going to run low. There are always areas of concerns in the labor market. For example, among recent graduates. In general, though, people who want to work, by and large, are holding or finding jobs. They may well be concerned about future labor disruptions, but as of now, I believe the labor markets are broadly consistent with full employment. But on the price stability side of our mandate, the numbers are more concerning. The Fed's preferred measure of inflation, the one I talked about earlier, 12-month change in the PC price index stands at 3.7%. The 6-month change a little above 4%.
Concern and inflation, be careful,
Comparable
guys.
measures from the CPI index are also elevated, as are core measures both of PCE and CPI inflation. None of these measures are perfect, but they all tell a similar story. Inflation is running above our 2% target. So the Fed's predominant focus right now should be on prices. So what's our job? The job for policymakers is to capture underlying trend inflation. Easier said than done. We want to gauge whether underlying inflation is rising, falling, or seems to be stuck in place. We also want to understand not just the direction of travel, but the speed. Each of these broad inflation measures have fallen significantly from their highs of a few years ago, but progress over the last couple of years has been more modest. And while this summer's PCE and CPI readings were better than expected, they do not tell me that underlying trends have meaningfully improved. The data also show moderate wage growth, but in my view, when tracking underlying inflation, wage growth has not proven a reliable indicator of future inflation for a very long time. So to try to gauge underlying inflation, I want to tell you about a couple things I've always looked to. I find it instructive to disaggregate the 199 individual components of the PC price measure. Over the last 12 months, 54% of goods and services in this basket showed price increases above 3%. This is well below the post-pandemic highs of about 77%, but it remains well above the level of 32% in a couple of the decades that preceded the pandemic. Looking over just the last 6 months, the conclusion is similar. 49% of goods and services in the PC basket showed price increases above 3%. Again, this is well below the post-pandemic highs, but still elevated, quite elevated. The recent rise in overall commodity prices also bears watching. What we need to judge is whether the trends we see indicate upside inflation risks. Now, it matters, too, whether the inflation readings of the past 5 years have seeped into expectations. The good news is that measures of inflation expectations in the medium term, by and large, look stable. And inflation compensation measures from the swaps market send a strong and similar message. Especially in light of recent developments, it's a credit to the Fed as an institution, consistent with the best of the Fed's traditions, that market prices show confidence that we will deliver price stability. And I can assure you, they're right. The thing about market measures of inflation expectations in economic history, I know some economic historians in the audience, is they all tend to look really strong and durable until they don't. These expectations are not pushed around easily. And right now,
thank you, Warsh. Thank you.
Very well anchored.
What would we do without
him? Must be
him?
closely minded. And it's the Fed's job to make sure that inflation expectations do not get unanchored. Now, there is one signal nobody can miss. The responsibility for 65 months of sustained elevated inflation sits squarely with the central bank, and that's where it belongs. So here is my standard. We must be confident that underlying inflation is moving to our objective, clearly and at sufficient speed. Otherwise, we have work to do. That's our job, that's our mandate, and that's our charge to keep. So I've covered quite a bit of ground in the last 25 minutes or so. Let me see if I can conclude this way.
Did he say he just covered a lot
We
of ground?
stand here today.
Stop lying to us, Warsh, please.
Not a decision. My Fed colleagues and I are hardly the first to hold these positions in a time of great consequence. We are determined to redeem the time by doing our very best work. For those of you that know us, you'll know the following is true. We take our responsibility seriously, with humility and with resolve.
Do you?
We know so much depends on the choices we make. Sound monetary policy helps households and businesses to prosper. When carried out effectively, it broadens and deepens the momentum of our economy and helps to secure America's leadership in the world. And I know that our country needs us to think carefully and act wisely, perhaps now more than ever. It's a tremendous honor to serve once again at the Federal Reserve. I'm truly grateful for the encouragement, good counsel, and the warm reception I've received in my first 100 days from my colleagues. I'm also honored and grateful for the views that I've gotten, solicited and unsolicited, from so many of you in this room. For that, and for your kind attention this morning, I say thank you. Let's get on with the rest of the program.
So yap. No forward guidance. We don't want to do forward guidance anymore. I think I helped. Like, that's all we got from Warsh, guys. Were we expecting anything more? Guys, let me stop sharing my screen for a sec. I'm going to share Seb's screen. We're going to use Ask Market to help break down what exactly he was saying, some of the headlines, and how you can start trading this, because that's it. Yeah, that is it, man. That is the whole entire nothing.
Yeah, so we're gonna, I'm unmuted. So we're gonna do right now is just ask our proprietary software what exactly is to expect, because Jackson Hole just ended. So this is something very important for anybody, if I'm being honest with you. Did he just take the stage again, or is Reuters?
No, you're lagging.
Yeah, there's lagging behind. I was no way he left and came back. You know,
he was like, I forgot to tell you guys. Oh yeah, no more forward guidance. Like, I'm just gonna say that 50 times and give you guys absolutely nothing.
Yeah, that was like the first half of the speech was like, okay, so we're not going to tell you anything. And then he said, but we're trying to be sincere and not give you guys excuses. I'm like, buddy, you're fighting your own words right here.
Yeah.
Yeah, it's crazy stuff. So let's go ahead and just check. So we just asked Ask Market. So Jackson Hole just ended. What can we expect next? And what can I do to trade gold, NASDAQ, and S&P 500? NASDAQ and S&P 500 for futures traders, gold for CFDC. So let's go ahead and just start here. So first, we have the trade setup, the flip watch, and the NFP reaction. We do have calendar events right here for gold, and I'm just going to showcase first. This is going to be for all of them, right? You're going to have the widget, the chart with the support, the target level, and this is going to be for the S&P 500 as well. So that's just one. Number two, I want to break down a little bit more, not only with the technicals and of course the fundamentals driving it behind, but tell me more about Kevin Warsh's speech.
Bro, Market's going to give you more information than Kevin Warsh just gave us.
Exactly, completely agree. That's number one. And number two, if you use like Claude, ChatGPT, Gemini for any type of trading related questions, it's gonna throw you around 10 paragraphs. Okay. If you see your screen, this is beautiful. You already have the chart here that you can change it between the 15 minutes, the 5 minute, the 1 minute. You can even click on this candle right here to understand what is actually driving the price of gold at this exact moment. And the same goes for NASDAQ and many more. But let's just scroll down a little bit and let's just see what's going to happen with Warsh. So Warsh delivered a hawkish leaning Jackson Hole speech this morning, emphasizing that the Fed's firm 2% inflation target and warning the Fed has work to do if above target inflation persists. That's number one. Then below, a very, very short paragraph telling you exactly what you need to know. You're going to have the headlines, right? With the headlines, you can click right here so you can explain the headline, or we can teach you the headline as well. And last but not least, the immediate market reaction, right? So we can see that gold did go down 1% from the 46.30s to the 45.30s. The hawkish tilt crushed non-yielding gold on elevated volume as real yields and the dollar surged together. Now, key takeaways: the tone shift, the gold reset, and the equities resilient. Now, last but not least, we can see that I believe, yeah, it's going to be next Friday, so it's always going to be the first Friday of the month. We're going to have NFP, right? So this is will either validate worse inflation concerns with a strong payroll plus wage hit, or September's hike live. Now, of course, as you can see, Ask Market just provided what Kevin couldn't give you in 30 minutes. He just gave you in 5 minutes. All right. So I just wanted to showcase a little bit of now. It's just every time I see it, it's just beautiful, man. We have the beautiful dollar chart right here with the economics events, what the tape was reading. Then we have the gold one as well with the candle analysis. It gives you the whole economic events of what happened, the breaking news, and even on ES. So people, this is the way, right? If Kevin
Yep.
doesn't give you a lot of information, you're not going to go ahead and look for 10 different sites, 10 different tabs just to get this same answer, or go to Claude or ChatGPT to read for 10 minutes to get this answer. And you're not even going to have any type of visuals in the technical side of things, which a lot of people do need. So this is 100% the future. And what would you say happened today, Kev, with your
Well, I
book,
was
Kev?
I was gonna say, well, now that you guys get to hear from the better Kevin, that'll actually give you forward guidance and understanding of everything. I want you to ask Market, if the Fed doesn't give forward guidance, what else can the Fed give us? Because quite honestly, if all he's going to be doing is repeating the data that we already know, which is where inflation's at, where the jobs market is at, there is no more of an edge to listening to the Fed. There is no much more of an edge of waiting for those FOMC events. If he's just going to come on and repeat the data we already know because we use MRKT, there's really, the whole market's pricing in. There's not going to be anything for the market's price in if there's no forward guidance to be taken.
Completely agree. Now, of course, this is more of a technical, not this is more of a research question. It's not that oriented with directly the charts. That's why we are going to have to read a little bit. Now, what I'm going to do for you right here, anybody that's here with me, I do see Mitch saying bring Powell back. I hope the world hears you, man. I mean, we need him. I just remember last year's Jackson Hole Symposium. It was a phenomenal trade. I mean, he did give us forward guidance as he usually does, and then in today's age, it's different, man. It's different.
Yep.
But of course, now if you want to take, please, anybody take a little screenshot here. Now, this is an answer that's not, you're not going to receive it from Claude. You're not going to receive it from ChatGPT. I even, you know what, I dare you to ask it this same question now, because you're going to see that it's not, they're not connected. So why it's not going to give you the same answer? Because they're not connected to real-time data. All right. They're not connected to CME data. They cannot give you any type of data. They're just going to scrap Yahoo Finance. They're going to scrap the internet for free information. And that's
Yep.
what you're going to receive, right? So, of course, we do have inflation target framing, reaction function clues, tone and urgency. Please do take a screenshot of this if you can. Now, how to trade this? Now, the data is the new guidance, NFP, CPI, PCE. So what he's saying is that forward guidance has stopped. So what are we going to see? Of course, we got to see our economic events, the important ones like NFP, CPI, PCE, jobless claims. Now, jobless claims is not that important unless we have a big deviation. Jobless claims is a weekly event. Now, we do have a threshold to watch, which if Warsh gave you the if above target inflation persists, we got to track core PCE. Now, rate market pricing in your real-time Fed tracker, Fed speaker calendar, and many more. So please, I don't want to bore you with this many information, which is very valuable. So just take a little screenshot, take a little pause there, and just go from there. What do you think, Kevin?
Yeah, I mean, it's unfortunate, but it's definitely a whole lot of nothing from the sky. Gold bounced off exactly where I was looking for off that
Exactly what we
45.80.
talked about. Exactly where we talked about it already bounced. I mean, I even had a little friend. I don't know if he's here on the chat. He was looking for some cells. He was
Yep.
targeting the 20s. Imagine that. He took a sell from the 50s. But he's a go-to trader. I'm not gonna lie. So if he took that with conviction, that's fine. What I recommended for everybody, of course, is just wait until the noise and dust settles, and then just look for this buys that we were anticipating. You can just go back an hour when we gave this trade callouts, and you're gonna see that it's 100% real. But yeah, now on Nasdaq, what are you looking for right now?
So Nasdaq, it was sort of exactly as predicted, right? We'd sell off first, and then we'd find some buying pressure. We're at new high of day on Nasdaq right now. We're not at new high of day on the S&P just yet. I am anticipating it. VIX is continuing lower. Weighted index is finding some strength. I am actually considering some possible shorts on gold off of the area that we're at, and one of the main reasons for that is because obviously, he didn't give us forward guidance, but he didn't give us proper confidence, right? There was not a lick of confidence in anything he said. All he did was repeat back what we already know. So
Yes.
I'd be real patient with where we are. We're ranging. We're clearly at an extension right now on Nasdaq and the S&P. There's really no reason in my eyes to be trying to chase a trade up here unless we get a validation, we get an entry, we get some real proper reason to take that trade.
100%. And just to back you up right there, Kevin, I mean, being honest with you, we can see the first thing, right? We are on a reversal risk, even though we are on a bullish day trading bias. Number one. Number two, I wouldn't recommend anybody to buy here, okay? I wouldn't recommend anybody to buy in the 52.72s. I personally wouldn't do that either. Why? Because we have to close above. This has been a big consolidation area for the past month, I believe. So, well, for this specific case, it's been for a week since August 21st till today, which is August 28th. So that's been a week worth of consolidation. So for us to go back into that range, we have to close above people. And as you can see, number one, we're on the 30-minute time frame. First, we don't have a lower wick on the 30-minute time frame. Number two, on the 30-minute candle, we just rejected the place that I told you guys not to buy on the dots, and we're rejecting it really hard. Number three, our day trading bias, of course, it is bullish, but we do have the reversal risk with the flip watch being activated, and of course, the GOAT himself, Kevin, telling you guys that he might be looking for some sells. So if we have everything aligned, we have like around 4 or 5 points together. So that's what builds a strategy. That's what builds an analysis. You have already 4 or 5 points that are supporting your ideas. Now, last but not least, if you just want to, just go to back to Ask Market and ask directly. But what we're trying to do is try to do your analysis alone and then trying to go back to market just to have everything back checked and to have more confidence in what we're going to be executing. But yeah, for now, for me, if I'm being honest with you, Kevin, it's probably going to start dying down. If we do have something, we're going to be slowly creeping to the lower side, but slowly but surely, probably we're going to stop right here in the 45.30s. Once we get to that point, probably the day is going to end, and that's going to be market close, right? So, but what are you looking for, man?
Bro, I'm in some shorts on gold right now. We're in profit already. I'm just a few micros playing it light size, knowing the volatility. We're knowing that we might be range bound, but all entry right to profit. Love to see it.
That's
Absolutely
love to
love
see
it.
it, man. Love to see those, exactly.
Dollar was also finding some support. This looks good. This looks good on these shorts on gold. We had this broken support area. I mentioned this could be a possible short opportunity too, and it is so far playing out okay. Like I said, I might get out of one into some strength just to play it safe, knowing that we can range back higher. But we were very close. Look how
Very
close we
close.
were to this
Yeah,
low. I was looking for 45.80. We hit 45.80.2.
580.2. Beautiful, man. Beautiful trades today. Even though we got a little bit of nothing, and he just let us know that we're never gonna receive anything again.
Yeah.
Um, literally. Well, but at the end of the day, he did give us a little bit of inflation comments. So I don't know. He likes to play games. All right, that's
That's
how
for
I see
sure.
him. He likes to play games. Let's see.
Bro, that's an understatement. He likes to play games.
Yeah, man, it's crazy, right?
Nasdaq is ranging. I'd be way more careful trading equities at this point.
Yeah.
Gold seems to have a bit more momentum. Just be very careful. I'm going to look to try to get out of a gold contract just at this low of this current 5-minute candle. We have a minute 40 left. I liked the dollar was finding support that helps gold to push lower. Again, lacking any confidence, going to really lack the follow through. Overall, there we go, gold. Love to see it. Give me a drop right here. Give me an
Love to see it.
drop. Little Beastie Boys in there.
See, but I saw somebody comment that.
What's that?
I saw somebody comment that not too long
Bang.
ago.
Out of one gold contract, they're locked in profit. 3 for 3 on the
Man,
day. What a day, guys. What an absolute legendary day. Thank you, Warsh, for nothing. Thank you,
yeah.
us, for the trade setups, because that's how we do.
Thank you,
Minute left on this
market.
5 minute. What's that?
Yeah, thank you, market, man. Holy.
Yeah. Bro, Market AI set us up nice today, bro.
Nicely, yeah, I completely agree with you, man. It's been a good day, even though we didn't get that much, but it's so far so good. We do have that trade going on with gold, little short position there. Now this is the name of the game, people. It's we gotta go ahead and just be patient here, right? We gotta dissect price action. We gotta set our TPs. What are we expecting with this? Now remember, this is a Friday, so nothing out of the ordinary. If we don't push a lot lower than this lows, well, I would anticipate just maybe even close around here. If I'm being honest with you, people, we're gonna have a little bit of a war, and then we're probably gonna close around here. This is going to be the
Nice.
closure. Yeah. I've seen this happen multiple times. Now, of course, this is a phenomenal range. I'm not telling you guys not to take this. This is a around 400 pip range, depending if it's a standard lot, that's $4,000, people. In what, like 3-4 hours. But of course, to trade with a standard lot, you do need to have the discipline, the experience, and the conviction behind any trade that you take.
Yep. Absolutely. Absolutely. Always need conviction, you need confluence, guys. The more confluence you have, the more reasons to take a trade, the higher probability the trade becomes. Look at this gold trade playing out right now, guys. Bang.
Bang, bro.
Bang.
Exactly. Bang.
Bang, bang, bang. Guys, smash that like button. Let's run that to 100 likes today. Come on, guys. Show a little love.
A little love, right? We have some people here. We have some people here.
Yes, sir.
Any comments? Anybody? Let's see. So grateful for marketing. Oh, Justin, you're the GOAT. Thank you so much, my man.
It's our pleasure.
It's literally our pleasure, man. So look at that gold. Gold is going beautifully, man.
Yes, sir.
Holy. So if anybody would have taken that trade that Kevin called out, you guys would be already around in 200 pips in profit. Now,
Bang.
of course, here we don't give financial advice. We're not telling you guys enter a sell right now. We're not telling you guys that. We're telling you what we're doing, all right?
Yep.
And why are we doing it? And if you want to follow us, that's on you.
That's right.
Thanks for hopping on, Shadowbox. No way, Sans. He's seen the videos. He's seen the Shadowbox videos.
Oh yeah, I seen that too. That's funny. That's great.
Dude, I appreciate you, man. If you follow me on Instagram, I actually post I try to be motivational for the gents, for the people out there. It's needed sometimes. So if you want to follow, hey man, you're more than welcome. But yeah, man, it's been a fun day. I mean, dissecting Warsh. It's fun for me because it's having Kevin here and then his first Jackson Hole symposium. You gotta dissect the man. I remember with Jerome Powell, some people would say if he came with a tie, it was something. If he came without a tie, it was another thing. If he came with his
Purple
glasses
tie.
and remember purple tie, if he took his glasses out, it was game over. I mean. There were so many things, and now we gotta do the same with the new Fed chair, which is gonna be Kevin Warsh. Of course, he's not giving us any room to breathe or even to try to dissect them because he's just being like not friendly at all. But let's see what happens in the future, man. I mean, I think Jerome was a little bit like that at the beginning, and then COVID happened, and then in COVID times, just forward guidance was the way which we needed. The markets needed that forward guidance, but let's see what happens, right?
Yep.
Now, before anything else, I do want to tell just everybody, I mean, don't be expecting fireworks right now, all right? If you took the gold sell, as you can see, Kevin already secured a contract. Yep. So that's number one. Number two, do expect it to come up back to your entry. I mean, it wouldn't be out of the ordinary at all, man, at all.
Nope.
But for it to actually break above and go back into the previous range, that's going to be a little bit more harder. So
yeah.
Patience is key. If you see it floating back in your entry, let it be. If you want to secure a little bit of profits right now and just leave the trade running more, then you can also do that. But of course, don't be expecting much. This is after the big move, which the big move, it was impossible to catch, but it was around 1,000 pips, right? So take that in mind, people.
That's right. That's right. Keep an eye on this. I'm probably going to look to scale out of this last contract if this 1 minute closes with a bit more strength, but we are respecting that zone. That's a good reaction right there.
Yeah,
5
it
minute
is.
closes in 56 seconds, letting it close.
Yeah, if the 5 minute closes below that, it's yeah. I mean, for me, yeah, it's literally closing below the 45.55s and then just slowly but surely going down to the 45.50s. And then just seeing the reaction there, because we did have a snapback before and then some 5 minute closures above that 45.50s. But let's see.
I'm moving my stop loss, guys. Break even, no lose trade. We are officially 3 for 3 on the day.
And that's something that I did on Wednesday too on the stream. We had a beautiful gold buy, and then we set that to break even, which did get hit. But I told everybody that we're going to be looking for longs a little bit lower, which I did take those longs after the new daily open, and it went phenomenal.
Nice. Well done, Seb. Good job. New 5 minute beautiful bearish continuation. Amazing. Guys, if you made some money today, you learned something today, you enjoyed the stream, please smash that like button and join us every single day, Monday through Friday. We are going to be wrapping up market in the morning in just a few minutes here. So any questions, please let me know. This gold short, just again, entry right to in profit. Fantastic.
And profit. No, that's the 45.50s mark. Yeah, that's the price handle that I was telling you guys that we might get some bounces off. Now, if anybody wants to secure, you're more than welcome. That's around 200 pips. So,
fine, Seb, I'll get out of my shorts.
I mean, no, if you miss out on a little bit more profits, don't get mad at me, man.
Yeah.
It's
well,
more,
you know what?
It's protecting capital and making capital. That's the name of the game, people. It's not giving back. Okay, I hate giving back $400. I don't do that. Okay, I mean, it's for me.
That's right. Why? If you're already up 400, do you really want to risk that 400 profit you're in for an extra 100?
The answer should be no. For an extra 100, it's not worth it, people. It's not.
Yeah, I'm killing this trade right here on this pullback. No point in being in it. Beautiful.
Yeah, it was beautiful. We had that beautiful big 5 minute closure below the 45.55s. Right now, this is the new 1 minute candle, which already it already fucking, not my bad. Apologies, people. I already actually it faded out. It faded out that 5 minute candle. So yeah.
Yep. Awesome. What a move. Let's see NASDAQ over here. Volume profile wise. Let's see what's going on here.
Insane entries, I gotta say, Kevin, this week. We got some insane entries.
Yes, sir, bro. You already know, man. We call those tops on NASDAQ. Even, when Warsh started speaking, we hit, I look for 29,707. We hit 29,7, what is that, 06? 06 and rejected. And that's a crazy move. All right, ladies and gentlemen.
Yeah, before we leave, Sans, I just want to say thank you, man. Thank you. This guy's funny.
W stream, yes, sir.
W streams. Any other questions before we leave? We're gonna start wrapping this up before 11 a.m. Eastern time. That's London close, so don't expect much moves after that fact. All good steps or quick in and out. Yeah, next week. So welcome top. That you have it on have it on dialed. I mean, that's next week is going to be better intraday trades. So it's going to be a lot smoother. Yeah, it's our pressure. Karina, Mac Elite. It's always fun being with you guys. Thank you, Sans.
Absolutely. Absolutely. Guys, if you haven't already, hit that like button. We're going to be wrapping up market in the morning right now. 3 for 3 on the day. We took an ES short, made money. NASDAQ short, made money. Gold short, made money. That is how we do at market in the morning. What a way to end the week, guys. Have a great weekend. If you're going to keep trading, don't risk more than you're willing to lose. Understand that some of the volatility is starting to not so much fade. I would like to see that NASDAQ continue with some momentum. But just be patient at this point. Don't be jumping into anything just haphazardly. Have a
simmer
reason.
it down. Mm-hmm.
Yep, exactly. All right, everybody have a great day. Seb, thank you for being here. Absolutely great breakdown and great Warsh coverage.
Yeah, thank you so much for having me. I will catch you guys next week. I'm going to try to be here a little bit more, people, so hopefully you like me, huh?
Let's go. Oh, bro, we love you.
I appreciate you, my brother. Well, thank you guys. Take care, everybody.
Take
See you
care,
next
guys.
time.